interest in terms of, I mean, the numbers are numbers, but they've also kind of put forward that entire demerger process by a couple of months.
I think it's a great trading play. You buy the consolidated entity. I'm sure once they get listed separately, the value of the separate listing will be higher than the consolidated entity. So from that point of view, I think with a holding period of 3-4 months or so, there's scope to make a good return in Vedanta.
Okay. Vishal, Megamart, Deepan, any thoughts? It's not done anything after the listing, but numbers came through.
Yeah, I think very impressive set of numbers, 10% type of same-store sales growth, so very impressive, and a lot of sales coming from apparels as well, and right positioning in terms of tier 2, tier 3, from that point of view, good runway, reasonable valuation compared to its peer group, so I think it's worth a look in. I'm not gone that deep into the company, but certainly these numbers are an eye-opener.
And what about
one minute, do you think the stocks have fallen enough? Canes fell, Paytm, Zomato, and more importantly, Trent used to be such a darling. They've all fallen like 35-40% in a month. Any of them becoming...
Yeah, that's right, Lata. But, in markets like this, you're very uncertain whether if the markets drift lower, go lower, then these are the same stocks which will be targeted more because they still trade at very rich PE multiples. So from that point of view, I just want to stay away. I think let's see how the market evolves. And I would just say that I was just reading through the news. More importantly, today is what Trump action is going to take on all these tariffs, So it's like a budget for US as well, I think.
Yeah, but that's only on Canada, Mexico and China. So I guess we're going to be spared today.
Absolutely. Just about tariffs, etc. Names like Vari, Premier Energies, these solar names, there is some expectation that there'll be a basic customs duty imposition on import of solar wafers. Deepan, do you like these names? There's no doubt that growth will be super strong. It's about valuations. Your thoughts?
No, Prashant, I think that I'm getting very positive on these companies, and valuations also coming into that sweet spot, especially Vari Energies. Sure, I think there could be a knee-jerk reaction if there's tariffs on solar modules, etc. But these companies would work around it. Other than that, ex-US also, the market is huge for them. And these companies are getting very good scale, backward integration to improve their margins. Only fear is how much is the overcapacity which will actually happen. Let's, it's a good trend investment theme to track closely and understand it and invest in.
And Deepan, what about good old consumer stocks? Yesterday was the first sign of some life and we got decent numbers, right? Nestle, Marico, volume growth was not too bad. And we know they've been completely bombed out, beaten out. Now let's see what happens today. But if at all you look at FMCG and staples, will it only be a tactical short-term trade, or do you think there's some merit in adding them to the portfolio now?
No, Surbi, any upside in FMCG is a great opportunity to exit zero in FMCG is what I would say from a portfolio perspective. So don't get drawn into such rallies on the buying side at all. And a lot of investors have been investing in these stocks for decades and generations. I think any rally is a great opportunity to completely exit out of the sector.
And why do you say that? Because you feel that valuations are still high and growth will be anemic? I mean, what's the rationale?
A lot of products have reached mature category. They have not been able to sustain even high single-digit growth rates. And from that point of view, I think forget about the valuation. If you don't see growth, you have to get out of the stock.
This stock.
What are you buying now? An incremental 100 rupees. Where would you put it?
No, nothing.
Cash. Stay in cash.
Waiting for this budget, waiting for this earnings season to get over, waiting for the Trump announcements to be over and done with, and the RBI policy, and then I think we can, look at
Trump announcements, Deepan, Trump announcements are not getting over. All the other events they have a exit date, a sunset date. Trump announcements, I don't know, not too sure.
Next 4 years, right?
Next 4 years.
Deepan, just a couple more names. I don't know if you looked at this name, Blue Jet. Reported numbers. There is some institutional coverage as well. I mean, super 90% growth in earnings, 600 basis point improvement in margins. Any thoughts?
Yeah, that's right. Even I was very surprised with the earnings, and they're getting into this API and contract manufacturing, and that new division has done exceptionally well for them. I just want to understand the sustainability of this particular division, and maybe you should call their management and understand what something new is happening over there. And how sustainable is it, or is it like kind of a one-off? Because the existing traditional business, I think, which is contrast media and other similar chemicals, that I think is not growing at that. It's typically at 8-10% type of growth rate, but some new products, I think, on the oncology side and some of the other very interesting therapeutic segments. They have launched some products over there. So it could be a good investment idea. I think one needs to dig a bit deeper.
Deepen in one infra name, because they will increase infra expenditure. Execution and spending is a different matter, but when you get that number, I suspect there will be some excitement. But out of that infra pack, anything looks interesting. L&T reported good numbers. Everyone keeps underestimating them, they keep beating. At least that's the story last few quarters. But what's the play here? Could be power, infra, roads, whatever.
I'll give you two names, Afcons and L&T. I think if you want to play the infra game now, at least you have something for some more names as well. And I think even ITD cementation post-acquisition by Adani, those prospects of that company also change. It may go into a growth phase company in which we and our clients are invested in. I think see what happened in cement. If you look at the entire cement space, ACCA and Ambuja did the best amongst the cement companies, and that would be the Adani touch. Something similar can happen in ITD as well.
Okay. Well, Deepan, just stay on with us. We have our colleague Timsi Jaipuria, who's standing by, actually out there near Parliament to tell us what we could expect in terms of a budgetary agenda. She's been speaking to a lot of big people out there.
Well, some of the key expectations from the union budget is that the government will not deviate from the path it has laid for the fiscal prudence, and the expenditures are also likely to remain in check. Most of the expectations are that the fiscal deficit number for FY26 is likely to range between 4.6% to 4.4% of the GDP. When it comes to divestment receipts, expectations are that there might not be a significant jump in the divestment receipts for FY26, but yes, when it comes to subsidies, the expectations are that it may rise substantially in FY25, surpassing the budget estimates by about 18% or so, but when they are expected for the next fiscal, they are likely to remain steady. When it comes to taxation side, some of the expectations include that the government could give some sort of a sweeteners when it comes to the new regime. But yes, when it comes to the old personal tax regime, there might not be any change. On the other hand, when it comes to the taxes levied on the corporates, there could be a reintroduction of the concessional corporate tax rate, which expired in March 2024. So that's also another key expectation. And yes, when it comes to further simplification of rules, procedures, simplification in terms of the Income Tax Act, that is something where a statement will be laid out. When it comes to simplification towards the custom duty rate structure, that too is expected in the budget. Let's see what finally happens when Finance Minister Nirmala Sitharaman unveils her 8th record budget.
Okay, well, those are visuals coming in of the Finance Minister Nirmala Sitharaman arriving in the North Block. I mean, that's the typical sequence of events, and you get that visuals every year after year. And FM with the top team then proceed to the Rashtrapati Bhavan to brief the president. From there, the finance minister will finally make a way to the parliament to present the union budget. I mean, so those are pictures and visuals which are coming in. Now, the economic survey expects modest growth of 6.3 to 6.8% in FY26, which is not very far from its FY25 estimate. Parikshit is here to give us the key highlights from the eco survey. Parikshit, take it away.
The economic survey notes that the real GDP growth in FY26 is expected to be between 6.3 and 6.8%. The CA has warned about the critical risk regarding dominance of financial markets in shaping policy and macroeconomic outcomes, which has led to unprecedented levels of public and private sector debt in some advanced economies. The Economic Survey 2025 has given a clarion call for deregulation and getting out of the way. The CA has gone on to say that the future of reforms in economic policy must now be on systematic deregulation, and government must get out of the way and not micromanage the corporate sector with regulations. On AI, the survey says that a collaborative effort between the government, private sector and academia is essential to minimize the adverse societal effects of AI-driven transformation and deliver inclusive growth. The CA, in his briefing, highlighted the huge disparity between profits and distribution of incomes in the private sector. While corporate profitability soared to a 15-year peak in FY24, the wages have lagged. A striking disparity has emerged in corporate India. Profits climbed 22.3% in FY24, but employment grew by a mere 1.5%. Despite Indian companies achieving a stable EBITDA margin of 22% over the last 4 years, wage growth has moderated. This uneven growth trajectory raises critical concerns. Wage stagnation is pronounced, particularly at entry-level IT positions. On trade, the survey says that to remain competitive and enhance its participation in global supply chains, India must continue reducing trading costs and improve facilitation in order to boost export competitiveness.
Okay, so those were the key takeaways, but the economic survey also raised alarm over disproportionate rise in corporate profits. You know, the one that Parikshit just referred to. Corporate captains responded to this CEA's call for aligning wage growth with profits, also reiterated the need for, their ask for a capex hike. Listen to what reactions we got to the economic survey.
When wages are determined by inflation, it is determined by wage surveys in the market. They are not indexed to profitability. And because when profitability goes down, the reverse doesn't happen also. That's not the way it is done. And what we have to also look at the fact is when we are looking at wage growth, we are looking at an aggregate number. The fact of the matter is industry has become efficient and needs to do so to be competitive. The fact of the matter is there is servitification of industry. A lot of components of manufacturing are now become to be done by specialized services agency. And that's what's happened across the world.
First, we would say stay the course on capex. That's been a plus in the budgets over the last few years, which is a focus on the multiplier effect that capex brings in and the positivity from an economy standpoint on that front. The second is there is clearly a need for some demand stimulation because we see weakness in the middle and the lower segments, and that's something that needs to be addressed in a pinpoint manner for them.
Okay, well, those are sort of lots of opinion that we got. We'll play out more. Prakash Devan is with us as well, right here in our studios. Prakash, thank you very much for coming on. So let's just talk stocks because we talk enough macro over the next 2 hours or so. What's top of mind to you based on earnings or whatever?
Yeah, I think the earnings have probably got eclipsed because of this anticipation of the budget being a very key event. But surprisingly, earnings have been much better than what we had penciled in. At least till now, whatever has come out.
Which ones?
No, I mean, if you look at some of like even stray names like Indigo, and you have some smaller companies in the defense space. I mean, you wouldn't expect a trend to be emerging so soon. It's still January just got over. But my sense is that except for some of the banks which have disappointed,
yesterday's banks.
Yeah, I mean, you had a little bit of this thing with IndusInd and Bandhan. Bandhan, of course, has been in the mend on the way to be mended. So very clearly, expectation from earnings has been slightly different than what you would anticipate. But top of the mind from the budget seems to be, 2021 onwards, we've had a lot of corporate support coming in from the government, and that's reflected in the earnings to the extent that the economic survey talks about disparity between the acceleration of corporate earnings and wages. I think for the consumption side, for the individual salaried class or whatever, if we were to have some sort of a slab getting introduced, some rationalization without too much of tweaks, we've had enough tweaks on the taxation part. That could probably be very positive. That could probably, start making people believe that things could look up in terms of what I have to spend. And the last thing is agri and housing finance, that is the pocket I'm looking at. That's, of course, we don't know what all comes through, but agri seems to be a very prime area where things could start making a big difference.
Okay.
Hopefully
there? Okay.
Unfortunately, we don't know which element of whether it's on the input side, supply chain side, or the funding side, but I think there'll be something creative coming through on that. So let's see, based on that, just an hour away. And
let me ask you a viewer question. Yesterday in the lift in my building, this is what I was asked. Kal budget hai na, uske pehle kya kharidun? That whatever the budget does, there are still people who are looking at because they think things look cheap. So do you have a buy list which is a budget?
No, so to be honest, we believe that some of the expenditure that the government has initiated will continue on the defense side and probably get more meaningful and deeper. So there are small companies there which can grow big. And I like micro caps and small caps. So my bent of mind has always been I wouldn't look at a BEL and a HL if I had a choice with a smaller company. So there's one company called DCX System, for instance. Very small, but very high on IP, very high on technical prowess. And they are into defense and aerospace. This is a very good combination of private sector capex and the government spend. So, just about 3,400 crores market cap. I don't think it's too big in that sense. But earnings could kind of, make a big difference given their, runway. So, you'll have to look at that.
Maybe you want to repeat it if we have the share. DCX.
DCX. Yeah, I mean, it's a Bangalore headquartered small business, very, very well run. Not much talked about. The float is also not very significant, but very high quality management and the business model per se.
All right. Prakash, stay with us. Let's get in Mitesh and Sudarshan as well with what they want you to do with this morning. The preamble from my side is that on budget days, even if sometimes you're right, you end up being wrong. So it's a volatile day. Keep that in mind. Gentlemen, good morning. Great to have both of you. You guys are the experts. Mitesh, your thoughts first. From last Monday's lows, markets have rallied nicely, 600 points. And now we have this event. What should one do?
Morning, Prashant. In fact, been positive since last 4 or 5 days, suggesting that the Bank Nifty and Nifty could see higher levels. Now, the Nifty has also crossed 23,500, and this structure is positive. Given the fact that we are running into an event on the back of 4 days kind of an up move, the event will be difficult to guess, but let me highlight some critical levels. One, any intraday declines to 23,350. That will be a buying opportunity on the Nifty with a 80-90 point kind of a stop loss. On the upside, 23,630, 660 is my zone. Once we clear that, then I think I'm looking at 24,000 levels also being tested. So these are the two levels which I'll watch on the Nifty. Similarly, on the Bank Nifty, I think I would want to see the Bank Nifty get past 49,750 and then 50,100 is the next pivot. I think these are the two levels to watch on the upside. And on the lower side, I think 49,350 is my buying zone, but I would be slightly more biased towards the Nifty. Last 3-4 days, I've been advocating buying on the Bank Nifty, but looking at the structure yesterday, the Nifty looks slightly better placed. So any decline to over 23,350, 400 zones for me would be a buying chance.
Sudarshan, morning. What would you recommend?
Good morning. Well, I would recommend staying away. I never trade on large, big news event days. The markets go wherever they want to, and we have no idea. Now, suppose the event was not there today. I would have said that the Nifty has started a short-term uptrend, wait for a dip, and go and buy on dips. Today is not any day to trade. And I would just ask you, Prashant, repeat that preamble that you said. No matter what you do today, you're going to lose money. Be patient. The next week will come, and the week after will come, and the markets will be here every day.
No, and I think that's very, very well put, Sudarshan. So no need to take unnecessary risks, and that's very well put. What would you, in terms of specific stocks, Sudarshan, what would you recommend?
Well, suddenly I have a lot of auto stocks in my list. Now, I can't explain the underlying theme because I'm just looking at the charts. But Ashok Leyland is a buy with a stop under 210. Exide Industries is a buying opportunity with a stop under 365. Hero MotoCorp is a buy, stop 42.40. And finally, Muthoot Finance is a buying opportunity, stop under 22.05. And I'll answer a question that Lata did not ask. And that was that if there is a sector of stock, I think banks should do well irrespective of what the budget does.
Oh, okay. That's important. Thanks for that. I was going to ask a question on which sector, which is what I was asking Prakash also, irrespective of the budget. Mitesh, your stocks?
Yeah. Morning, Lata. I have a buy on Adani Green. If it crosses 1,015, there will be some intraday bullish pattern. So buy there with the stop at 994, targets of 1,065. Coal India is a buy. Disclaimer, we have some futures positions, so there's vested interest, but that's a buy with the stop at 386 for targets of 415 to begin with. A buy on Bharat Forge with a stop at 1215 for targets of 1285. And IRB Infra is my final buy call.
Okay.
Keep a stop below 55 half, look for a target in excess of 60.
Okay. Actually, Mitesh, that's nicely balanced. Adani Green, Coal India. One fossil, one non-fossil. Okay, gentlemen, wait on. We'll come back to you closer to trading time. Quick break. We've got lots more questions and answers on the other side.
Co-presented by SBI, the banker to every Indian. Co-powered by Coin DCX, India ka crypto coach. And Royal Ranthambore Premium Glassware, India's finest yet. In association with UTL Solar, Topcon Solar Panel. And Rajhans Ivana.
सर मेंबरशिप होगा
पर मैंने तो यूज भी नहीं की।
फिर तो वेस्ट हो गई।
कैरी फॉरवर्ड कर दो।
ऐसा कहाँ होता है?
मेरी नीवा भूपा हेल्थ इंश्योरेंस पॉलिसी में।
मतलब?
It lets me carry forward my unutilized base coverage to the next year.
जिंदगी को क्लेम कर ले।
Available in turbo petrol, diesel and EV. Tata Curve, the most feature-packed SUV.
किसी भी बिजनेस को सक्सेसफुल बनाने के लिए वक्त के साथ अपग्रेड करना बहुत जरूरी होता है। पेश है आपका अपना भरोसेमंद साथी बैंक ऑफ इंडिया MSME लोन्स।
बैंक ऑफ इंडिया, रिश्तों की जमा पूंजी।
कुछ पल नहीं दिशा दिखाएं, कुछ पल हिम्मत बढ़ाएं, मंजिल नहीं फिर दूर जब कुछ पल साथ बिताएं।
तुम्हारे साथ बिताए हुए पल मेरे साथ रहेंगे जिंदगी भर।
मंजिल नहीं फिर दूर जब अपने साथ निभाएं।
LIC से मिले बीमे की रकम ने ही मेरे नए काम की शुरुआत को मुमकिन बनाया।
कुछ पल का साथ बन जाता है जिंदगी भर का साथ। LIC, हर पल आपके साथ।
This is TV18 and you're watching CNBC TV18.
Co-presented by SBI, the banker to every Indian. Co-powered by Coin DCX, India ka crypto coach. And Royal Ranthambore Premium Glassware, India's finest yet. In association with UTL Solar, Topcon Solar Panel. And Rajhans Ivana.
Welcome back to CNBC TV18 Motilal Oswal Budget Headquarters. We've been speaking with Prakash Devan. We're going to have more guests. Prakash, I wanted to ask you about the capex-related stocks for the simple reason that yesterday we got the April-December numbers from the government.
Yes.
And capex has really gone through the roof. They have spent 1,70,000 crore in 1 month compared to 50,000 crores in the last December. So April-December, now they are up 1.5% year on year. Till November, April-November, they were minus 12.5% year on year. So big government seems determined to spend its... Any thoughts?
So no, that's absolutely a very positive this thing, and that's what I was saying. You need to look at which are the sectors that will finally get most of the benefit percolating. But we have started looking at playing the capex theme by buying into logistics businesses. Okay. So it's like if you generate more power, you need to evacuate. If you manufacture more, you need to move the goods somewhere, right? And our infrastructure on logistics is fairly dated. It's not the best in class yet. So ports, 3P package, 3P warehousing, all of those are themes that will start looking up. The number of companies, the kind of companies that's a bit smallish, you really don't have. The moment you talk about logistics, you go to a Concor or you will go to a TCI, but then there's lots more if you dig harder. So that's where you need to look at.
It's interesting, Prakash, you say that. By the way, I just want to point out that we've started getting some of the pre-open rates are trickling in, 70 to 80 points higher on the Nifty. That's how it's looking right now. The reaction on IndusInd is negative in the pre-open. Like I've been saying, while we all knew they have an MFI problem, but now it's really showing up in the numbers, in the slippages which are higher, in the credit cost that's higher. So let's see. It'll probably settle down. We'll wait for this because Abhishek was telling us that while the numbers are bad, maybe not as bad as the market was fearing. So let's wait on this. But Prakash, on capex, while I understand your point on playing it via the logistics players, what about the bigger companies? the Siemens, ABBs of the world, I mean, Hitachi with their HVDC, look how they've done. Now, I know the argument against these companies was that they were all trading at 100 PE.
Valuations, yeah.
Some of that has corrected, but is it enough?
I don't think it's enough. Because you've already penciled in the growth and they will have to grow to justify these valuations. So, the market tends to kind of discount things in exuberance. And some of the businesses I was looking at are probably discounting 2047, the Viksit Bharat numbers as well. So, which is far-fetched, but you'll have to be cautious. But you have areas like pharma and, agri, cement. Those will probably attract more attention based on how people interpret the announcements as we hear them.
Okay.
All right, let's actually throw it across to our colleague Shireen, who is joining in from Delhi to lead the coverage from budget headquarters in Delhi. Shireen, good morning.
Good morning, guys. Yes, of course, we're just counting down to the finance minister's speech. This is going to be her 8th budget, record-breaking number there being delivered by Finance Minister Nirmala Sitharaman. And, we've been talking about expectations and wish lists and all of that. I think the mood here in Delhi, and this is what all of our colleagues are also picking up, is that the message is very clear. It should be seen as a do-no-harm budget. Now, how feel-good will it be is the question, but no controversies. Don't want any kind of negativity attached to the budget. So a do-no-harm budget is certainly what the government is going in with as an approach at this point in time. Relief for the taxpayers, that's the number one ask. But again, I go back to, just the economic survey as well as the comments that came in from the economic advisor last night saying, look, it's not mutually consistent to continue to ask government to do the heavy lifting on capex and then also expect them to do significant tax cuts. It doesn't work like that. There is limited fiscal space and limited fiscal room. The government so far has always prioritized capex, has always prioritized infrastructure development and investment, and the baton now needs to shift to the private sector to start to lift on investment, wage growth, and so on and so forth. So we'll have to see whether there is any change as far as prioritization is concerned. I would imagine that there will be sweeteners on the tax front for the middle class. That has been something that's been talked about, and perhaps this budget will deliver. But how significant will all of that be is the question. And even on capex, overnight we saw the numbers come in. 6.85 lakh crore rupees is the actual spend. It has been an improvement, and that's what the government was hoping, that as the year progresses, there will be a pickup in spending. So, whether we're going to see a significantly higher number or not, again, let's temper our expectations on that. And we'll also have to see what the number is versus B2B and RE to BE as well. So those will be some things to watch out for. On disinvestment, and I heard many guests talk about that. Look, we've not just undershot the target, we've been nowhere close to the disinvestment target as far as the last many budgets are concerned. And I think increasingly the feeling is that there is limited appetite for significant disinvestment or even privatization. Even stuff like IDBI Bank so far, which has been on the list for the last 10 years, and that process of EOI and bids and all of that has gone through. We're still awaiting a decision on that. So I'm not sure whether there is really any appetite, and we should sort of have in store a big number as far as disinvestment, etc., is concerned. So that's really the mood here. Do no harm. How much will it be feel good is the big question. But we'll get you all the industry leaders joining us here at the CNBC TV 18 budget headquarters with the Confederation of Indian Industry through the day. Let me go across now to Nigel and Mangalam live at the National Stock Exchange as CNBC TV 18 rings the budget bell. Nigel, Mangalam, over to you.
Well, what a day it is, right? We're calling it a Super Saturday. We're calling it the day where we seize the moment, and that's exactly what the hope is out there as well. We're here at the NSC on a special trading session for the budget with special people as well. We have the man himself. Sir, what are your expectations from the budget? Because the stock market wants no change from a tax standpoint, be it the long-term capital gains, short-term capital gains, STT. They want some sort of relief. What are your expectations? Let's start with that.
Running an exchange is basically providing the framework. The market's participants have their own perspectives. We as exchange have our own perspectives. And so we tend to work more on the developmental side, saying if the country grows, if the businesses grow, then naturally the markets will grow. And the taxes are more temporary in a way. So that's where we try to focus more on the developmental side and the growth side of the budget.
Definitely, but I'm sure that you would have some, desire for from the stock market standpoint.
No, the idea is to have more consistent approach which the government has taken over the last 10 years. And if you look at it the other way around, what are the sources of revenue for the government and what are the sources of expenditure? And literally GST is a situation where all the states have a veto. So GST is something the central government cannot do on the budget. What remains is only the income tax part of it. And that's where most of the time, last 10 years, you have seen some changes here and there. But again, because everyone has expectations in terms of the spend, that the social spend has to be there on the food, on Ayushman Bharat and many other things, as well as or infrastructure, and that's where the government will be sort of trying to juggle all these things, and we are pretty sanguine that if they are able to spend money on infrastructure, then naturally it increases India's ability to grow faster, and of course the markets will also benefit in the long run.
All right. Sir, this time capital market has been a big contributor to the tax kitty as well. Do you think this momentum to continue?
Of course, see, India is just growing. I think the growth has started. More people are participating, and so STDs and sort of a framework of capital gains tax also have come in over last few years. And I think put together, if India continues to grow, more people continue to participate.
STD number has already breached the expectations of this year. Do you expect any STD cut in this budget?
For me, the STD itself is so small, people don't even realize. And that's why I don't think there's going to be too much of tinkering with the STD part at all.
All right, but the markets will be hoping for some kind of a booster shot, so let's wait by for that. Gautam, let's come across to you. What's the crucial number you're looking at? We have been having this debate whether we're going to be focusing more on consumption or capital expenditure. What's the crucial number we should be tracking?
So the headline number will be fiscal consolidation, which will anyway be lower than what we have seen over the last 2 years, which is great.
What's the number that will keep you happy?
So our forecast is 40 basis point consolidation this year, which is lower than 80 basis point we saw for FY25, so it will be good. But I think more than the headline number, the mix of small schemes, packages, etc., whether it turns the sentiment both for consumers and corporates. That's what markets would look at.
Let's go across to...
Let me ask Nileshbhai on the capex front. Nileshbhai, you expect Dhoni-like batting in the last 3 months to meet the capex number?
Well, at least in December, the quantum increased and the quality increased. So let's hope that Dhoni spirit lives in the capex and we achieve 11,11 crores, auspicious number.
We did ask Ashish about what his expectation from a capital market standpoint is. He said that from the exchange standpoint, he wants the framework to continue. What does the market want according to you? I mean, what do you think the way the positioning is right now? Everyone's a little down on sentiment. What is it that can boost sentiment, turn things around? Not for the near term, mid-term and long term, but just, the way things are right now.
So if we go by the meme industry, then they just don't want increase in taxes.
Okay.
If we go by real market expectation, they want Triveni Sangam. One, as Gautam mentioned, fiscal consolidation, deliver on the promise of 4.5%. Number two, go for capex because private capex is subdued. Support urban consumption, especially as that has started slowing down a little. And finally, if you have to spend money and you have to maintain fiscal deficit, then you have to raise resources. Now, please don't tax people who are already in the net. Outside of tax nets, there are many big sharks. Go for them. And my wish list, which I don't know whether it will ever come, is raise resources through out-of-box thinking. For example, we always have believed that Western world does things right. In US and most Western world, there is exit tax. We have seen many rich Indians leaving India and settling down abroad. Why not tax them? Second, we all know how much gold Indians own. We don't even know probably how much gold Indians own. That's lying in our tijori and safe deposit locker. It's a frozen savings. Why not do a gold monetization scheme which can bring those gold in tijori to outside economy and provide growth capital for our entrepreneurs? The third thing, we have been managing our PSUs pretty well in last couple of years. But overall return on equity on PSUs, bearing few exceptions, is really poor. Should we copy someone like GIC, Temasek or Norges kind of sovereign wealth fund, which allows us to manage our PSU assets better, generate better return? So there are multiple ways outside of economic survey, outside of budget, to raise resources, use those resources to fund capex and other investments, and maintain the path of fiscal prudence. That will blow the market's mind.
Okay, all right, Nilesh, I thought, my imagination was going a little wilder since the SIP flows have been strong, the domestic money has been strong. Do something to, give a little further impetus, because those FIs have been selling.
Nigel, what will be the happy return for you in SIP?
For me?
Yep.
I'm going to keep it going.
What return, in your opinion, will be good?
It should be at least, in the mid-teens over a longer duration of time.
This correction, SIP returns are already in mid-teens.
Yeah, right, but I'm hoping that it sustains, right? I mean, and if I get more, I'll be even happier. But
see, if they present a budget like this, I can assure you that those returns will be sustained.
What will bring FIIs back? $30 billion sold over the last 4 months or so. What do you think will bring them back?
It's not about only the FII, but the FDI as well. Anything in the budget that you expect that will draw a lot of FDI capital and FII capital?
So on the FDI side, I think the CE has done a fantastic job on ease of doing business. When your wage slip font is prescribed, when the swing of the door is prescribed, when maintenance of health record for the cook is necessary, all those things create an inspector Raj. Now, you have to whitewash your wall, but what is the definition of whitewash? Who knows? So we have to improve ease of doing business from the current level. It's better than the past, but we still need to go ahead. If we improve ease of doing business, my feeling is that FDI will come back. Please remember that there is also FDI going out with people like Hyundai booking profit, LG booking profit, Whirlpool booking profit. So it's that experience that in India there is exit also. In most global market there is Chakravyu. You can enter, you can't go out. So FDI will come provided we can improve ease of doing business.
All right, I think we are about 20 seconds down to opening the market, ringing the bell here from NSE itself. So we'll just
it's a super Saturday and
let's do a countdown as well. 9, 8, 7, 6, 5, 4, 3, 2, 1.
All right.
Okay, so it's a green start at least.
The bell has gone and the bulls have spoken from NSE, and we had, I think, there's a image floating around on social media, which will, you'll see Mangalam and Nigel rub the bulls' horns, and maybe for now that's really worked. About 26 points higher. The Bank Nifty is a little iffy. I just want to quickly check the reaction on IndusInd Bank to begin with. Right now, 1.2% on the upside. Even Sun Pharma, after the conference call, the commentary, everything, Sun Pharma is also on the upside. So, large caps looking good, but mid caps looking even better. 0.5% up on the mid cap index.
All right, let me just quickly run through a few more names, right? So, in terms of what's happening right now, because we must address that. Inox Wind is the big mover. And we discussed this in the morning. So 7.5% on Inox Wind. Vivek highlighted the numbers, looking very good. Stocks have seen big damage, along with Suzlon. Suzlon is up another 4.5%. So this is the renewable part in that sense. It's, I think, budget related. There's no other reason. RVNL, IRFC, Jupiter Wagon, Ircon, Railtel, Titagarh, BEML, these are all up between 2 and 5-6%, and these have all got huge volumes. There's no separate railway budget. You'll hear allocations, etc. in this budget, and there's been focus on spend on railway. So this is that, nothing else in that sense. Apart from that, Sun Pharma is up about 1%. It's starting small higher. Wockhardt ended 10% in the green yesterday. It's up another 3%. From the EMS space, you've got Keynes, which is up about 2.6 higher. Remember that electronic component PLI, 25,000 crores. So something we may hear from the budget today. There is Praj Industries, which is up about 2%. These are also potentially, right, ethanol, etc., government policy. Depending on government policy, budget play, we don't know. Kalyan Jewelers is the top volume traded loser. It's not down much at all. Yesterday was a repair. It was up 10% yesterday. It's down about 2%, starting up.
Gold duties
big
are expected?
Gold duties are expected, certainly. And Manisha has been telling us about that. UPL saw a big move after that guidance, which the market likes. Stocks are about 600, but again, over the years, big underperformer. ONGC is down 2. Bandhan Bank is down 0.75%. These are some of the top volume traded losers. EPAC Durables is down 5%. And I think Chola Finance is also reacting to numbers. It's down about 1.5%, 2% or so at this point. Hero MotoCorp, that CFO stepping away, 2% lower, 42.60 or so as far as Hero MotoCorp is concerned. There is Karnataka Bank, Aster DM, 5-star, but volumes are thin, so I wouldn't take too much. I mean, I think the market is absolutely flat. 5-point change is neither here nor there, and I think that's
what happens if you play it on Saturday.
It's the right way. But also, it's the budget is. I think the right way, right? You don't know what's going to happen, so go in absolutely light.
There's some
and
red.
Unchanged.
Some red. Watch the banks. There's a little bit of red. Bank Nifty and Nifty for the time being.
Okay, Nilesh, thank you very much for joining us in our studio. Big day for us, and thank you for being with us. Well, how do we start? Do you think we should start buying in now? Because as I was telling one of our foreign guests, the rupee is cheap enough and stocks have fallen. And we have, that FII number started declining. Yesterday was only 1,800 crore. You think they're reaching some kind of an inflection point?
It looks like, Lata. Clearly, few things have happened. Most importantly, like what you said, the currency has become a lot more attractive from an investment point of view. Valuations have corrected quite meaningfully. The large caps have corrected 10 to 15% from the peak. Yes. It's been almost about 4 to 5 months of correction phase that the large caps have gone into. On the mid and small cap side, the correction has been as high as 30 to 40% in individual stocks and almost 20% at the indices levels. And clearly, there have been pockets of growth. It's not that we're looking at the headline numbers and low single-digit growth, but then there are enough number of companies in various sectors which have demonstrated very, very strong growth. So clearly believe that clearly the fundamentals are still intact and the valuations have become more compelling, more appealing.
By the way, just revisiting again more numbers, ONGC is the biggest loser on the Nifty right now, and that's a result reaction playing out. So Darshan earlier was telling us that crude oil realizations have been on the lower side. So and there's, I think, lower other income, which is why the profit is also below estimates. So just keeping that on the radar. Nilesh, hi, great to have you with us on a Saturday today. I just want to get your sense on this FPI selling. And I know we've all been very brave and, as investors and as a country, we need to be. And domestic institutions have done a phenomenal job of absorbing the selling. But in your memory, do you remember a time like this where on a daily basis, usually it's in a pattern, it waves up and down, but it's been this one-way incessant fall. Do you see it changing at all unless there's a major crack on Wall Street? And if it continues in this manner, then what are we looking at, irrespective of the budget over the next couple of weeks and months?
Well, clearly, I think one of the challenges which they have faced is more around their home market doing extremely well. The US pretty much has been the best performing market, at least over the last 1 year. And then the views around the strengthening dollar, the weakening EM currencies, that's clearly been their very, very big focus area. And on top of that, valuations here, they look at it more from a historical perspective that we're trading at premium valuations versus our historical averages. So that's been the second big factor. The third big factor is probably, I'm not entirely sure about this, but India is probably the only large market where foreigners have to pay tax. I think you as an individual, if you were to invest into the US market, you probably don't pay tax in the US, you pay tax in India.
Look, Americans have to pay tax for their market. I mean,
on your home market.
Foreigners.
Yeah.
10% tax across the board of the US.
If you as a foreigner invest in any major market across the world, you as a foreigner, you have to pay tax in India, not in that foreign market. Okay, so if you clearly see it, I think these are the three factors. One is your home market doing well, two is the valuations, and third is, of course, the tax angle. These have been the three factors. Now, even if one or two out of this give way, which means either the tax gets reversed, the probability of that is extremely
let's not even
low.
go there. Yeah.
But if, let's assume, because of this correction, the valuations look a little more attractive or more reasonable, or if the home market,
the US market starts underperforming,
looks more expensive in context of the overall growth, that India earnings will grow in double digits, US earnings will grow in single digit, and therefore let's move to India. I think if any one of these three factors starts to play out, this trend can reverse.
But the question is, I don't know if you see it on the horizon anywhere or not. And if you don't, my question was, if that inflection point doesn't come anytime in the near future, then can a capex announcement today, we are at 11.1 lakh crores, now let's say they say 12 lakh crores today, can just an announcement like that from the budget revive market spirits?
It can. I think the first is do no harm. I think if that's the starting point, which means don't raise taxes, if at all simplify taxes, rationalize taxes, maybe lower taxes, that's a good, useful starting point to have. After that, if the budget continues to be growth oriented, there's a huge focus on capex, on infrastructure. If there's a more better capital allocation, the capital allocation which has been happening over all these years, if that gets accelerated even further, these could be good trigger points.
Absolutely. I think well put. First to no harm. I think we'll live with that. And anything on top, of course, is cherry on the cake. Let's throw it back to our colleagues, Nimesh, Nigel, Mangalam at the NSC. They've got a stellar lineup there as well. Guys, over to you.
Well, thanks a lot for that, Prashant. Well, we have Bala as well, who joins us on the panel. Bala, thanks a lot for joining in. Well, tell us what's on your wish list. Budget 2025, nothing wrong in wishing, right? But if you could give us a couple of points on your wish list.
Of course, clearly, if you look at last 3-4 years, I think you've done a great job in terms of ensuring the budget expectations are kept under control. And second, the fiscal focus, which has been the main focus for the government, and also improve the overall tax collections. I think we've done a great achievement so far. I think in this first year, probably we'll see the fiscal deficits will be a lot more under control. The government will have enough room actually for them to actually give away more in the hands of people. Therefore, my expectation in the budget is having seen good success in creating a great collections in GST, tax collections overall to GDP ratio has been improving, and the government capex has also been going up each year to drive the economic growth. I think they'll have enough room actually to drive the consumption growth this year. I think probably more money in the hands of people, especially at a time where the last 2 months have been, almost six months have been quite tough. The economic growth coming down and the general consumption slowdown has been seen. So
you're saying a bigger focus on consumption is what you're looking for, and you believe that they have the headroom?
Correct. They will probably have more tax cut, especially for the middle class income people. So more money in the hands of people, they'll have more money to spend, and therefore the consumption can be driven back. Okay. So that one big area of focus, I think my own belief will come. And second, consumption to boost. I'll also not be surprised if they take a bet in terms of capital gain tax cut, given the fact the last 2 years, despite increase in taxes, and the Indian equity market has done exceedingly well in providing the much needed capital for corporate growth. And given the fact that now today the need of the hour is actually to drive back the growth in the economy, there's a high probability when they may even consider some element of tweaking in the tax structures to ensure not only, of course, it boosts the capital market sentiment, it also boosts the whole ecosystems around the real estate.
So you're saying, so reduce it a little bit is what you're saying?
There is, I think, with last year.
Calling for the sweets. You just call for all of them because the bulls would definitely rejoice that.
But of course, I'll take a bet because I'll not be, of course, I'll take a bet on that. Given the fact last year was a surprise increase of about 2.5%, which is not needed as such, given the fact that you have been quite compliant and tax ratios have been increasing, and the stock market has been helping actually for companies that raise capital to fund the growth. And that is being the case that people have understood the actually power of how Indian capital market can provide capital to the Indian economic growth. Given that fact, and also given the fact that FI has seen only outflow in the last 1 year, there is a high probability that they may take a bet in tweaking the capital gain tax in such a manner. It boosts actually sentiment of capital.
Most on the street would be happy with no change whatsoever, but if you're saying that it is lower, then it will only be the added sweetener. Let's ask Gautam. Gautam, realistically, what can be done? Because yes, everyone's hoping for capex to happen, consumption to be boosted, fiscal consolidation, all of that. Realistically, what according to you is the expectation? And on fiscal consolidation itself, the next couple of years, yes, we do have that glide path. Thereafter, people are looking at newer ratios as well, perhaps something like a debt to GDP. What is your view on that? And you have an underweight rating on India in your EM basket. What do you think should happen this budget for you to, twist that, turn positive once again?
So look, the government has a lot of levers always, as Neeraj Bhai was earlier mentioning about some unique measures which the government can always look at, or innovative measures to get more revenues. But beyond that also, the good thing is none in the market is worried about fiscal slippage. Unlike few years back, that itself is a great start. That gives a lot of leeway for government to keep sentiment intact. But in the context of this budget where there's a lot of demand around consumption, around capex, I think, look, ultimately government can't spend in a big way. But there are many small signals which the government can do. And what will be very relevant in my view from the market's perspective is if the entire package creates a feel-good and positive sentiment, both for the consumers and followed by corporate capex activity. Like if you go back a year back, we saw some signals of private corporate capex building up. Corporates were waiting for elections to get over. Post-elections, we haven't seen that come back yet. So any package, not necessarily in rupees or dollar terms, but at a broader package level, signals which revives this private corporate capex sentiment, I think can go a long way to boost markets. Finally, your question around our EM strategist underweight stance on India. Look, that's a relative call in the context of the near-term valuations, everything. I think there's no debate, including among the global FIIs who have sold in the last few months, about the structural growth in India. Look, in the context of FIIs also, their holdings in India is $800 billion, roughly. They have sold $20-30 billion. So it's not that they are walking away. They're still here. They want to be here. It's a question of getting the right opportunities in terms of the right stocks, and therefore the budget sending the right signal can go a long way in getting the interest back from the FIIs.
All right, just a quick question with regard to that preference in the emerging markets. India is, not top of the pop. So who's, do you bring China? It's a valuation call that you're taking out there?
So right now it's an overweight China call. That's primarily related to the valuations there and some stabilization in the macro, not necessarily a big recovery, but stabilization in the macro. But primarily it's a valuation call. It's an extremely undervalued market compared to history.
Well, that's an interesting point because everyone's talking about only the FI selling, but as a percentage of the market capitalization, actually it may not be that much. But the hope is that, in fact, they take their foot off the pedal a little bit with regard to the acceleration. Nilesh, let me get you into this. What's your take? If they let the fisc slip a little bit, not too much focus on the fisc, but maybe more measures to get the economy up and running. And to give, credit, the government spend, capex spend, as you mentioned earlier, 1.7 lakh crore in the month of December was the highest. And that's why even year to date, now the spend in this fiscal year is more than last fiscal year. So that was good. And the RBI as well, they have realized there's a bit of a problem and there are measures being taken. So your take?
So one, as Gautam mentioned, right now market will be benevolent on the fiscal slippage. But please remember that our combined fiscal deficit between center and state is upwards of 7%. I don't think so we should go on the path of fiscal slippage.
Okay.
It's like putting burden on your next generation for your today. Which parents would like to do that? I'll rather leave asset for my daughter than the debt. So same thing should apply to the government. And yes, there are various levers in the hands of government. Few I talked there. One big is the divestment. Now government today owns about 10% of India's market cap. There are many unlisted segments within government. Why not we manage that well and raise resources? You have almost $500 billion worth of PSU holdings which are listed. A small monetization over there will give all the resources you need to fund your spending and yet maintain the path of fiscal prudence. Today, very few countries are progressing on the path of fiscal prudence. If we walk over there, many FPIs may change their view about us.
So gold monetization, that exit tax, divestment, those are the three big measures.
Catch the sharks outside the tax net.
All right, catch the sharks outside the tax net. Once again, on this out-of-box measures, etc., while we're still talking about job creation, skill development, we're talking about boosting manufacturing, capex, all of that, the biggest underwave right now has been artificial intelligence. What's taking place in the world as well. We heard glimpses of that, read glimpses of that in the economic survey. Do you think the word AI will be a prominent, part of the finance minister's speech? Do you think the government, in light of what is happening right now, will maybe at least talk about that?
So undoubtedly, they'll talk about it because it occupied such an important piece in the economic survey. And we have to follow the ISRO model on AI. We don't have resources like Western world. China has already shown, albeit with a little bit of magical numbers, that they could develop AI at $6 million. That probably is a wrong number, but certainly it's much lower than what Western world is spending. And we have done that in ISRO. Prior to 2014, we sent 35 satellites into the orbit. Post 2014, I think we have sent multiple numbers of that at a much lower cost. If we can do that on satellite, what stops us from doing it on artificial intelligence? If the foundation program of AI is ours, then people will pay us toll for using that highway. If we are using someone else's highway, we'll have to pay that toll. Forget the security risk, just the commercial sense. The return on investment on AI foundation will be far, far better.
You spoke about satellite. The only satellite that the street wants is, a boost in the sentiment, and as a result of it, there would be rockets in the market, hopefully, Nigel.
All right, well, Gautam, let me come across to you then. On the markets, on the Indian markets itself, from the emerging market basket, you're not very, very positive, But there'll be sectors and themes that you'll still like as well, right? From this budget perspective, what is the booster shot you're looking at for a couple of themes out there?
Look, there are enough pockets already emerging after market correction.
Yes.
Not necessarily at a sector level, but at a stock level. But industrials, pockets of consumer, not broad consumer. Financials already emerging attractive.
So the best of industrials is not over. There is after the recent correction, some of them are looking good.
Okay, look, if you look at industrials top down, what we have seen in the big cycle last couple of years has been driven by specific spending by government, defense, etc. We still haven't seen a big private corporate capex cycle happen. So industrials, in theory or in possibility, has a long runway. But the missing ingredient is the private corporate capex cycle, which is one of the things we'll watch out closely in this budget.
Right. Bala, your top picks, sectors?
Yeah, the way I see is, one is of course budget is one part of it. And if you look at beyond the budget, we will have still RBI monetary policy. We'll have to do a lot of stuff, especially with respect to the step that they have taken the last 1 year in terms of tightening the credit growth, as well as tightening the entire balance sheets of the banks and introducing new measures to control. I think post-budget, depending upon how the fiscal numbers will be projected, the monetary policy will be more supportive of removing some of these tightness than last year to enable the growth back. Therefore, financial sector is one, have come to the reasonable valuations. And second is, I think the spending that has been happening in India, especially in the government capex, which is now picking up, you'll probably see all the sectors which actually been the large beneficiaries of the capex growth, including energy sectors, will probably be another big sector to look for as we move forward.
All right, well, that's an extremely interesting conversation from the NSC, where we rang the bell on this important day. Finance Minister with the President of India and, of course, her team from the Finance Ministry as well. That's this ritual. The Finance Minister goes to the Rashtrapati Bhavan and, of course, then with the permission goes to present the budget to the Parliament. So that's
the law
essentially...
says, Prashant, the law says the President causes the budget to be laid.
Correct.
So it has to be.
Absolutely. Well, those are some sort of ceremonial shots coming through.
But correct me if I'm wrong, that this time we're getting more visuals from, inside Rashtrapati Bhavan and some of the North Block. Usually
I think so, Surabhi, because I don't remember these shots.
We've not seen this before. It was the customary, earlier the briefcase, then the red tablet, but outside North Block. This is interesting.
The women are in step with social media more.
Absolutely, and why not, right?
Yeah.
So those are visuals, and we'll sort of keep on the visuals on the side of the screen as well. Let's get some corporate reactions now. Expectations more so, because the budget is still ahead of us, not behind us. Atul Lal is now joining us, Managing Director at Dixon Technologies. Is the leader in the EMS space by a long shot. Atul, good morning. Great to have you with us here. Thank you very much for your time. Prashant this side. It's essentially the poster child for what the government can do in terms of pushing an industry and really helping it start up from the scratch with those PLIs working their magic over the last many years. What should we expect this time around, Atul? There's that components PLI, which has been spoken about quite a bit. Your expectations?
So, Prashant, you're absolutely right. We in the industry are very keenly waiting for the component PLI to be rolled out. Hopefully, we'll hear something about it in the budget. please appreciate that the electronics industry has been on a significant upswing. And the agenda of the government is to take it up from $150 billion to almost $500 billion in the next 6-7 years. And the first part of ensuring that all devices are being manufactured in India has already been achieved. The next is to enhance the value addition, expand the value addition, for which the component ecosystem is required. So we are keenly looking forward to the rollout of the PLI scheme for components, which is going to be essential in taking the industry forward. That's one bit. Second, of course, electronics manufacturing is a highly labor-intensive industry. So we expect something more because the Honorable Finance Minister had already rolled out some schemes. We require some structural strengthening of the schemes. We feel that there should be something on that line also, so that the employment creation is seamless. So these are the two things. And of course, there is some tweaking required in the indirect taxes so that the operation of the industry is much smoother. So electronics industry is on a high, and we are keenly looking forward to this budget on these three parameters.
Atul, just one clarification. The earlier PLI winds down. There is no concessional. The component is, of course, ahead of us, but the earlier PLI is now winding down. There's no expectation on that, right?
So 25-26 is the sunset year.
Right.
PLI scheme for mobile. However, the schemes for white goods and telecom devices carry on. There is still a significant part of tenure is still left. So we feel that there should be something more on the PLI for mobiles, because mobile has already emerged as the second largest export product in the country. And we need some kind of handholding more, because still this industry is in a stages of infancy to take it forward. Possibly with some more tweaks, but some more handholding is required beyond 26.
Mr. Lal, just to get further clarification, the new PLI scheme, which has recently been announced, which is for electronics, that covers components, or are you now saying that we need another additional new scheme, which will specifically cover components that go into electronics?
So we are waiting for the rollout of the electronic components PLI scheme. We understand it's going to be rolled out shortly. Basically, we are talking and referring here to non-semiconductor components. What government had earlier under ISM 1 was primarily focused on the semiconductor components. So here we are talking about the non-semiconductor components, which form almost 50% of the bill of material of electronic devices. And that is essential in giving stability and also improving the cost structures in the industry.
Okay. And Mr. Lal, you're expecting that 15% concessional tax regime to be extended. You already have taken advantage of it.
Yeah, in many of our units, we are availing 15% tax regime. Yeah, because that's going to be again a big up, because we in the industry are having significant capex investments, and we're expanding. We are setting up almost 2 to 3 factories every year. Our labor intensity, we were 2,000 people 7 years back, we're 35,000 people now. So that support is also going to be helpful.
Well, Atul Lal, they're talking about the components PLI scheme, and I just wanted to make a point here, because in my conversation with the IT Minister, Ashwini Vaishnav in Davos, he did acknowledge the fact that the government is working on a PLI scheme for components. He also said that the consultation process was on, but did suggest that perhaps in the next few weeks we could hear something more about that. So whether we see an announcement in the budget or an outlay in the budget, I'm not sure. We'll have to wait to see. Of course, the expectation is that it'll be about 25,000 crores. That's the estimate at this point in time, but we'll have to wait to see. Mr. Lal, a quick comment from you on that?
Yeah, I appreciate it. We also have a similar understanding. So if there is some indication, some positive announcement, we know that the exact contours of the scheme is going to take some time to be rolled out, because it requires cabinet approvals and more complex processes. But some indication that is going to give a huge positive sentiment in the industry.
Yes, that certainly is the case. But I'd also like to welcome on the CNBC TV18 budget headquarters our budget editors, Atanu Chakrabarti, the former Economic Affairs Secretary, now the chairman of HDFC Bank, and Rathin Roy. Gentlemen, thank you very much for joining us. Well, not so bright and early, but bright and early for a Saturday morning for certain. Mr. Chakrabarti, let me start by asking you, overnight, any epiphanies on what possibly the finance minister could do or may do? Any out-of-the-box ideas at this point in time?
Well, all ideas are in the box, I guess.
they've been sealed. They've been sealed. Now they only have to be delivered. But you know, Nilesh Shah was just talking about what could blow the market's mind. Possible gold monetization scheme, sovereign wealth fund, taxing those who are out of the tax net, perhaps taxing Indians who are leaving Indian shores, to go abroad. You think that any of that is something that the government may want to consider?
Well, government had on the gold front, gold monetization has been thought through, but frankly, even the sovereign gold bonds which had come out have been costing a lot. They are quite expensive for the government. Perhaps in some fashion if it could be used, but in any case the market is using it to create credit. So to some extent that's getting used without government getting into it.
And you're right, they pulled back even as far as sovereign gold bonds are concerned because of how much it was costing the government.
Etc. Again, the idea of sovereign wealth funds have been there for quite some time, but it has to be linked to a very strong, powerful disinvestment program. It was talked about.
Any hope on that? Any hope on that? A very strong disinvestment program?
I have my prayers on that.
So you're not hoping?
I wish that disinvestment program picks up. Unfortunately, a lot of ideological things were attached to it. When it was happening, it was going great guns, almost 1 lakh crore per annum was happening. People said that companies are not getting privatized. So the ownership debate started and virtually killed the program. The narrative on which, frankly, which also happened perhaps from your studios, also to some extent killed it. I think people going out of India make for huge amount of remittances into the country. So taxing any of them, I don't think would not be a very sound economic idea. Because entry on exit of people, free market of, let me use the word labor in that sense of term, as well as free market for capital. These are two essential prerequisites to maintain our growth rates.
Absolutely. Rathin Roy, literally about an hour and a half away from the budget now, do you believe that in terms of priorities, things are likely to change, or it will continue to be capex, some sweeteners as far as consumption is concerned, and sticking to consolidation?
I certainly hope so, because I take a fairly realistic view of what government is capable of and what government is not capable of. And I'm very clear that the structural problems that the Indian economy faces are not going to be solved by tinkering with the budget. They require much more sort of whole of government action. So the best thing you can do in a budget is maintain macroeconomic stability, try and ensure that the budget does not respond to stuff like making markets go mad. Market going mad is the equivalent of a mujra. I don't want the market to get excited over mujra. I want the market to be excited over Indian economic fundamentals. So if the budget speaks to Indian economic fundamentals, and that involves stability, that would be a very good thing. And therefore, these kinds of everything that you mentioned that could happen in the budget will have an infra-marginal, irrelevant impact on the public finances. I think Atanu is right that the only place, we are not a net commodity exporter. Sovereign wealth funds are normally run by net commodity exporters. So if you did not want to spend disinvestment receipts in the year in which they were incurred, you might want to run a sovereign wealth fund for that. But that is irrelevant now, because the government is, in my view, not capable of disinvestment. And that is why you have this, the worst situation ever, I think, was in 2019, was it? When the government claimed they would do something like 2 lakh crores of disinvestment, end up with some pathetic number, 25,000, 30,000. That is the kind of nonsense that diminishes our credibility elsewhere. I must compliment the government. Since that date, if you either look at tax forecasts, if you look at disinvestment forecasts, They've been very modest, very achievable, and the government more or less has delivered.
Yes.
If you look at the RE, what it said it would in the BE. I'm hoping that track record continues and the government delivers in terms of on the taxation side in the RE what it said in the BE. On the expenditure side, I think the government is in a bind, which is important to understand. We're very interested to see how the finance ministry resolves this bind. If you reduce taxes, you reduce the space for public expenditure. You will therefore either have to cut expenditure as a percentage of GDP or increase borrowing. If you increase borrowing, you put further pressure on bond yields, which is not going to be a good signal for the markets. So that's I think the real bind, that even small reductions in the tax GDP ratio, might well now people say corporate taxes have fallen. The only way, frankly, you can raise corporate taxes is by raising corporate tax rates.
Which I mean seems highly unlikely at this point.
Because profitability has fallen, you see.
Not just that, but also the signal that you send out. I mean, you're saying that you want to revive private investment and then to be able to even consider the possibility of hiking corporate.
I have a mild disagreement there because I think private investment has not revived with low corporate tax rates.
No,
so if you want to make a trade-off and you want to increase private consumption demand of the rich, remember only the rich pay income tax in India, 3.5 times the per capita income, then you could raise corporate tax rates and lower personal income tax rates. But again, the impact would be inframarginal. So I agree with you. I mean, it wouldn't be, I don't see any great urgency for the finance minister to do it. So I think this ought to be a steady as you grow budget. Normally with that sort of budget, you will see a lot of dramatic rhetoric. The Prime Minister already started his rhetoric yesterday. I expect to see a little more of that in the last budget. The last 3 budgets have been shorn of rhetoric because the Finance Ministry had a job to do. They had to deal with COVID, they had to reduce the fiscal deficit, and therefore the Finance Minister's speeches were mercifully short. I'm saying something to listeners, the longer the speech, the less substantive will be the budget. So watch that speech.
Well, we will watch the speech. A quick final comment from you before I toss it back to Bombay. Mr. Chakrabarti, on the expenditure side now, this balancing act that they will need to do, something will have to be put on the table, something will have to be sacrificed. What is it likely to be?
Well, Rathin has very rightly said, your space on the face of it looks very limited. But it's very important to do the fiscal consolidation, otherwise to control the horses of inflation would become difficult because fiscal policy and monetary policy are somewhere joined at the hip. Therefore, I guess the time has come to have another expenditure commission for somebody to sit down, go line item by line item. There's a lot of junk which remains, people miss it out. They go in as standing charges which need to be removed. And cut it out and make it much more leaner organization. Government has to become small.
So our own version of Dodge.
Well, not in that sense, but however, not something overnight, not something which is sort of shakes the market, but something which requires...
No, fair point.
It happened with the last, there were 2 expenditure commissions, which did a reasonably good job in setting, and that cuts at the margins, but very effective.
Well, that is certainly an idea that we don't know whether the government will take forward this time around or not, but our budget editors are going to be here with us through the day analyzing the fine print, and they have the experience of doing that. But for now, it's back to the markets. Lata, Prashant, Surbi, over to you.
Thanks for that, Shireen. And the markets are holding up, keeping the green screen going, at least for now. Keeping the faith going, and the green screen is what we have, including a lot of buoyancy in mid-caps. We should keep pulling up some of these stocks, the budget-related stocks. PSUs is where the action is, your SJVN, a couple of these names, which is where the volumes are also on the higher side. NBCC, SJVN, these are up. And the infrastructure-related plays or the capex-related plays, they've been doing well. And then there are names like Suzlon, of course, on the hopes of renewables getting a boost in the budget. Nilesh Shah is with us. So, Nilesh, some final thoughts. At the end of the day, it's all about portfolios and what to buy and what not. Now, I know in our earlier conversations, you've always been a big bull on technology, that too futuristic technology, some of these cutting-edge internet companies. So they're going through their own challenges. I mean, Zomato and them acknowledging the competitive intensity. So are you still as optimistic? And what else beyond them?
Well, the recent correction has made me even more optimistic. Just look at where these stock prices were a month ago or 3 months ago. From there, they all have corrected probably between 20 to 40%. So be it essentially your quick commerce guys, your payment companies, travel aggregators, or some of the other platform companies providing services to mutual fund companies. This all has kind of corrected quite meaningfully, but the long-term prospects remain intact. Okay. So clearly, I believe that they've become even more compelling than where they were maybe a month ago, 3 months ago.
And budget related?
Gold. Budget related. Because the expectation is that gold taxes, import duties were lowered because the government had to meet the sovereign bond outflow. But now they're expected to be raised because that's a major outflow for India in terms. You look at gold stocks at all?
Gold stock, the jewelry stocks, yes.
Exactly. That's what I meant.
Yeah. I think that's an interesting segment. And today we have a choice. 5 years ago, there was only one title. Today there's a choice, enough, and there's been a meaningful correction in many of them. I clearly believe it's a great place to be, especially if you're betting on an aspirational India, the shift from unorganized to organized, and the non-discretionary, the discretionary spend. So I think that looks fantastic. That space looks very attractive.
It's budget day. We can't let you go without asking industrials and capex. Whatever is the view, and if you like, this space at all, then maybe some idea of the kind of stocks you'll play.
Yeah, the cap goods I think is a fantastic place, especially companies which are leveraged to the potential in railways, in defense, electronics, overall. I think manufacturing, infra, and capex cap goods. I think that's a fantastic place to be.
Good you brought up actually, electronics, because we just had that conversation with Dixon. What's your sense on this space? The thing is, when there is a good theme and a growth theme in the market, the whole market latches onto it. Then everybody has the same situation of 100p and 90p and how you deal with that. Some of it has started correcting, but again, how do you find them in terms of valuations?
No, I mean, optically, of course, the valuations still look high, but I think if there were to be a further correction of maybe 10-20% from there, I think it's a good place to be. I think growth will continue for the next 4 to 5 years. It's one of those very few pockets in the markets where essentially the investment opportunity aligns with the national priority. And therefore, I think it's a great place to be.
Okay. Keynes has fallen 33% from its highs, so perhaps attractive. Thank you very much, Nilesh,
Thank you,
for all
Thank
that
you,
advice.
Thank you.
But we have to take a quick break. Up next, we are going to connect with the tax experts. After all, we want to know whether we should expect lower personal income tax. Dinesh Kanabar will be with us, Mukesh Bhutani of BMR Legal, and Sunil Vadala of KPMG. Back in a minute.
Al-Qaeda offshoot, HTS, led by an Islamist jihadist who danced in the streets on 9/11 and who was responsible for the killing of many American service members. Democrat senators in the past resorted to anti-Christian bigotry against some of President Trump's judicial nominees like Amy Coney Barrett and Brian Boucher. I condemn those actions as a Democrat in Congress at the time, as religious bigotry must be thoroughly condemned by all of us, no matter the religion. Unfortunately, there are some Democrat senators who still don't understand the principle of freedom of religion and Article 6 of the Constitution. Quote, no religious test shall ever be required as a qualification to any office or public trust under the United States. Unfortunately, they're once again using the religious bigotry card, but this time trying to foment religious bigotry against Hindus and Hinduism. If anyone is sincerely interested in knowing more about my own personal spiritual path of Hinduism, I welcome you to go to my account on X, where I'll share more on this topic.
Hello and welcome to CNBC TV 18. We have stepped out of the newsroom to connect with you, the real experts, to hear your thoughts on what you believe should be part of Union Budget 2025. What changes would make your life easier, more affordable, or even a little bit more fun? Let's hear what people have to say. Is there something that you have in mind that you want to see this year?
I'm expecting some benefit for the middle class on priority basically, and since I'm working in a travel sector, probably some benefit for the travel sector, like some GST benefits.
The government should be taxes less on at least daily routine items. Right. If you are going to gold and all, we don't care, but we are middle class person, so we need to my daily budget going very high. So we want to do some reducing to daily items, product taxes.
Welcome back. The countdown is on, and just about an hour to go before the finance minister presents the union budget in Parliament. And now we've discussed markets, we've discussed, of course, the global backdrop, we've discussed the big macro numbers. Let's boil it down to what really matters for you and me, which is taxation. That's what we're discussing with our next panel, and we have our experts joining in, Mr. Dinesh Kanabar of Dhruva Advisors, Mukesh Bhutani of BMR Legal, and we have with us Sunil Badala of KPMG. Gentlemen, thank you so much for joining in. I've been bothering most of you for the last several weeks, going back and forth on this rate and that, and manufacturing companies, and the new nature of the act, etc. But let's open with the big bold question. Do you expect the finance minister to really deliver a bonanza for the middle class? Mr. Kanabar, if I could start with you.
Just one question before we answer that is that we are told that in the same session, or maybe today itself, we are going to see a draft income tax code, a new law coming in. So what's going to be in that draft act and what's going to be in the budget is going to be an interesting play, because you cannot have all the changes coming in the finance bill or the budget and then say that there is going to be a bill which is also going to deliver something which is radically different or radically new. So it'll be interesting play to watch out there. But I do expect that in this
Mr. Kanabar, just for the sake of clarity on this, and I'm glad you raised this point, because what she announced in July was a review of the Act, the Income Tax Act of 1961. And then there was the Direct Tax Code, which was, formulated many years back, and then it kind of went into cold storage. So how does it play out? And from what I've gathered with conversations with all of you all is that the review of the Act is unlikely to touch the tax rates. That's going to be more on reducing litigation, simplified language, removing redundant provisions. But the code has to deal with the rates, right? So if we have to talk about an income tax cut, how does it all come together?
That's right. And the rates come in year on year. And I on your channel always wondered as to why do we need to tinker with the rates year and year. In fact, one simple proposition which I have always canvassed is that cannot the threshold limit up to, beyond which you need to pay taxes be tied into an inflation index itself. But leaving that aside, given the fact that what the finance minister has been saying, what the prime minister has been saying about doing something for the lower and the middle class, I am indeed expecting both an increase in the threshold limit for taxation, and I'm expecting lower rates of tax going all the way, probably up to 15 lakhs of rupees. And I think that will be something very, very welcome. Again, I am expecting all of these to be under the new regime and not the old regime, because that's what the government wants to do, to push people to the new regime, with which I totally agree.
All right. Gentlemen, good morning. Thank you very much. Prashant this side. There is suddenly this sharp focus which has been, which is shining on, which is this difference between what corporates pay as taxes and what individuals pay as taxes, right? It's become now, of course, with it's very stark. It's been stark for a while, but there is a lot of focus now on all of this. So, Mr. Bhutani, I just wanted, I mean, is there any way this can be, will the government try to reduce this? I'm not sure if the corporate tax rate from 25 should go up, but on the individual side, can we see some changes to bring it lower?
I don't see why there should be alignment of corporate and individual tax rates. If you're going to tax businesses at higher rates of tax and not moderate rates of tax, you're making it anti-business. The whole philosophy behind taxing individuals at the higher maximum marginal rate of tax is to look at redistribution of income. That's the fundamental economic policy. Yes, at one point in time, the thinking was no matter what form of business you have, you should be taxed equally. But that is all in the passé. So I think that businesses should be taxed moderately. Individuals also should be taxed moderately, particularly in a country such as India. Otherwise, it gives opportunities for tax evasion or people having an outflight of capital or they themselves leaving the country. So I think the whole notion of having high corporate tax rates is, in my view, not the correct way to look at it. I think what needs to be looked into is what are the businesses that needs to be incentivized? And do you use tax rates for incentivization?
Yep.
For example, you had low rates on manufacturing that propelled manufacturing. Now that did not get extended, which came as a downer for many businesses. But if you ask me today, the corporate tax rates of 25% are still on the higher side. There is opportunity to look at India being more competitive and bring it down, if not to 20%, then at least to 22%.
Well, Mukesh, your point is taken, but that's not how you sell it to voters. And the middle class is today very vocal. You should see the number of memes. I'm sure you've got enough of them in terms of taxes. So, I mean...
you can sell that proposition to voters because the voters are also comprising of small and medium enterprises. It's not just about a debate on what should be or what ought to be the corporate tax rate. You know, most of our businesses in India are run by partnerships and LLPs and private companies. I don't see any reason why this class of voters should be subjected to an unreasonable or a high rate of corporate tax.
Okay. As you speak, the finance minister now is entering Parliament building. So we are just counting down. It's less than an hour now for the budget. Sunil, your thoughts, I mean, in terms of encouragement for manufacturing, that 15%, of course, was a big ask and its extension, but we didn't get it last time. Anything in terms of encouraging FDI for that matter, for the gift city, through the gift city? What are the corporate sector's expectations?
So, so I think, first of all, let me just say that I agree with what Mr. Khanabar and Mr. Bhutani said. In terms of the expectations for the Aam Aadmi as well as for the manufacturing company, I think this is a big ask. Everybody is expecting that 15% concessional rate for the manufacturing should come in this budget. I also think that it's not just for the new manufacturing companies, but even for the existing companies, we should look at, let's say, some kind of an investment allowance or some incentive if they want to expand their existing manufacturing facilities, which we used to have decades ago, where, let's say, if I invested into the new facilities or I expanded the existing facilities, in addition to the depreciation, I would actually get some kind of an additional deduction of about 15%. Now, something similar can be looked at, in my view. Also, in order to encourage, let's say, R&D expenses or, startup, innovation, etc., some kind of a weightage, deduction should be considered. Now, coming back to the, FDI, FPI issues, etc., I think, looking at the volatility in the market, I think there is two expectations. Right. One is, the capital gains tax rates. I know that there was a complete, change in the regime, but I think people are expecting or people believe that the tax rates for both long-term and short-term are little on a higher side. So maybe we should have some reduction there. Also, the STT, looking at the buoyancy in the collection of the STT and the capital gains, maybe there is some expectation that some kind of a rate reduction in the STT should be considered.
Well, if they decide to roll back a bit on long-term and short-term capital gains, then we'll have a working Sunday as well. It'll be a huge headline. I don't know if that comes true or not. But gentlemen, thank you for this sort of a quick take. We do have to take a break because the Finance Minister has now proceeded to enter Parliament. But we will come back to you as those announcements start trickling in. I think Shireen has the next set of guests with her as well. Shireen, over to you.
Going to be coming in just a second, Surabhi. Live from here, the CNBC TV 18 headquarters, we'll be joined by industry leaders from the Confederation of Indian Industry. And it's important there to pick up on the messaging that's being sent out by the tax advisors. Will they tinker with the capital gains rates? Remember, it was changed just last time around. So I don't know whether they are going to want to move so quickly or let the rates settle at this point in time. But of course, relief for the middle class, that's the big ask. And we'll take that conversation forward. We've also got with us our guests from FICCI joining us now. Let me go across to Anant Goenka and the FICCI president. Gentlemen, many thanks. The countdown has begun. The top three things that you believe the finance minister will deliver on, not wish list, what you believe they will finally deliver on. Anant, let me start by asking you.
What is the time now?
Anant, can you hear me? Well, we seem to be having... Harsh, can you hear me? Is my voice getting through to you?
Yeah, I can hear you now.
Yeah, very quickly to both you and Anant, the time for wish list is over. What do you think the finance minister will deliver on the top three things?
Sorry, can you repeat the question, Shireen? We couldn't hear properly.
Yeah, what will the finance minister deliver on, Anant and Harsh? Anant, let me start by asking you.
Yeah, so I'd say the first three things that we're looking at. One is a budget of continuity, continued investment in capital investment. The second is focus on how do you do ease of doing business. And the third is putting some money in the hands of the consumer.
CapEx and consumption. Harsh, what do you believe the finance minister is going to send out by way of messaging and signals to revive and unleash the animal spirits?
I think, from the government perspective, they will focus on the continuity. We have seen in the past, they have been quite consistent in their overall budget. And this time also we expect that the capex expenditure, which has the multiplier effect, will continue, and we hope that the government increase their spend in that. As Anant was saying, consumption is a bit tepid. So how do we increase and help boost the consumption? So that is certainly, we hope to see some steps from the FM on that front. And also in the area of manufacturing, Make in India, in the area of PLI scheme, I think, we hope to see some activity there also.
Yes, more perhaps with regards to the PLI schemes. But Anant, let me come back to you. You did a survey of your FICCI members ahead of the budget. What's the mood, both in terms of hiring, in terms of capacity enhancement, in terms of current capacity utilization? I mean, how strong is sentiment today? Where does business confidence lie ahead of the budget?
Right, I'd say there are two parts to the survey. I'd say one is clearly there is more positivity on the rural side. On the urban side, there is some concern. However, I think as growth comes in, capacity utilizations go up, we are looking at an increase in private investment. I think the challenge on private investment has largely been on the consumption side. So if we can just add a little bit of sweetener out there, it will make a big difference.
A little bit of a sweetener on the consumption side. Harsh, what is the expectation as far as tax relief is concerned? Realistically, what are you hoping for?
See, I believe, some kind of tax relief, especially at the lower end of the people, of the income group, that will certainly help boost the consumption and put in more money in the hand of the consumers, which will certainly help in the discretionary spend. So we are very hopeful, and to see some kind of steps there. And also at the corporate tax level, if they at the government level, at 15%, we expect to see something there as well?
Well, the return of that concessional scheme, which was phased out in 2024, we'll have to see whether that makes a comeback or not. Harsh and Anant, many, many thanks for joining us here on CNBC TV 18. We'll check back with you once the budget is delivered. But for now, the market's holding steady. Hero Moto under pressure today on account of the management changes, the CEO resigning there. The finance minister has arrived in Parliament ahead of the budget. It's 190 points higher on the Sensex, and the Nifty trending at 23,500 plus. So we will take a quick break and return with Voices from Industry. The Confederation of Indian Industry joins us right here on the CNBC TV 18 budget headquarters after this.
All right, thanks for that, Shireen. Let's dispense with the break and go straight away to our economists. We are joined by Samiran Chakrabarti, the chief economist for Citi India, and Sajid Chinoy, head of Asia Economic Research at JP Morgan, also a member of the PMEAC, of course. Sajid, Samiran, thank you very much for being with us. Sajid, yesterday Anant Nageshwaran was very candid. He said you can't expect the government to cut fiscal deficit, add to capex and do welfare spending. So what do you think they'll do?
That's exactly right, Lata. I think when there's so much clamor about stimulus, it's important to understand the macro backdrop here, that fiscal deficits are coming down. And I think the government's been very good about fiscal marksmanship. So, when they say they want to have a deficit at 4.5% or below, I take them at their word. And I expect to see a 40 or 50 basis point of GDP consolidation. The question is, how will that be achieved, right? Will that be achieved on the revenue side, or will that be achieved by rationalizing expenditures? And my sense is that, with CapEx, the good news is December CapEx grew very strongly. So hopefully the undershoot in CapEx that had been feared for this year will be less than expected. But the CapEx story is an important one. I would expect for it to grow at least in line with nominal GDP. Right? So you want to ensure that CapEx to GDP is at the same ratio.
So 10% over 11.1.
Well, the 11.1 may not be achieved because I think despite a strong December number, the asking rate for the next 3 months is still 55% growth year on year to get to the 11.1. So we may be, 10.5. But on that base, I think nominal GDP will grow at 10.5% like it has last year. So you'd expect to see CapEx grow at least 10.5%. This then introduces interesting trade-offs, because if CapEx to GDP is not falling, where will you get the reduction in the fiscal deficit? Some of it happens because other expenditures, defense expenditures, interest expenditures, don't rise in line with nominal GDP. Subsidies should not rise in line with nominal GDP. So there'll be some savings there. But the broader point is it involves trade-offs here, that if you want a tax cut as the market is clamming for, then some revenue expenditure has to be cut and vice versa. I'll make one final point. It's important at a time where there's been some slowdown in growth that we get maximum bang for our buck from the fiscal. And fiscal multipliers tend to be higher on the expenditure side than on the tax side. So really what you want is not to compromise expenditures that are going at the bottom of the pyramid, because those multipliers are higher. But these are the delicate trade-offs the budget will have to contend with.
Then you're clearly not the middle class's favorite, Sajid. There is a lot of expectation.
I think a targeted tax cut is okay, but the space is limited.
I take your point. But Samiran, do you think Reserve Bank dividend can make a big difference? 2 lakh crore again is a reasonable expectation?
Yes, I mean, obviously, as we were discussing, Sajid was mentioning that there are no free lunches. So clearly, somewhere you have to get an additional source of revenue from. In the last year's budget, RBI dividend provided that source. This year also, the number could be very large, and it could make a difference between these marginal changes that are expected in different things. Like, say, for example, we are estimating that the income tax cut or the tweak could be somewhere slightly less than 0.1% of GDP. So that can get carved out of that additional RBI dividend. Because the other source that economists have been suggesting for a while now, which is increasing significantly the divestment revenue, that does not seem to be the path that the government is walking because of certain market conditions. So that way, the scope for increasing expenditure or tax cuts gets limited. Yes, RBI dividend will definitely be watched very, very closely.
Samiran, they did not walk that path on divestment when the market was in the most charitable mood also, right? But that's a debate for another time, another day, perhaps. I just want to go back to that capex point and ask you, gentlemen, that, they started the year budgeting it at about, I think, 3.3% of GDP, right? Now with the slowdown, maybe they end up at 2.9% or 3% of GDP. Going forward, while, of course, Sajid has put forward the absolute expectations, the numbers for FY26 and, 10% in line with nominal GDP growth, as a percentage of GDP, would you expect capex to continue to trend at those high levels of 3.3% or so, given what the economic survey is urging yesterday? Economic survey is saying, the government has done its heavy lifting, its bit of the heavy lifting. It's time for the private sector to move up. Now, will that at all show up in the numbers in any way? Samiran?
So my sense is that the capex to GDP, public capex, central government public capex to GDP will not fall. But what is investors are increasingly looking at is exactly on what kind of things the government is spending. There is a perception that on the traditional sectors of roads, railways, defense, it's difficult to get that kind of high growth rates of 10 to 15% year over year, because there will obviously be some issues around whether the government will be execute them. So would there be some diversification of capex into other sectors like urban development, housing, R&D, water? That's one sort of a discussion. The other is that if the government is not doing divestment and PSUs are becoming stronger, would we see the PSU capex number to go up? If you recall, last few years, PSU capex have been coming off. This PSU capex has been going into the central government capex. So if we see the PSU capex number to go up, then the overall government capex actually will look much better.
All right.
Okay. I have an overarching expectation. I mean, all of us have. This economic policy framework, Samiran and Sajid, the promise was that she's going to announce something now which will kind of, cover for the medium term. What are you all expecting? Sajid first.
Today is going to be outside the budget math. There's so much focus on the budget math, but the short point is fiscal degrees of freedom are constrained when you're reducing deficits by 0.5% of GDP. In fact, Lata, what you said, I think, are the more important elements. The July speech spoke not just about an economic policy framework, it spoke about working with the states on, on structural reforms. It spoke about reimagining the financial architecture. It promised a review on basic customs duties to rationalize import tariffs. It spoke about, making the income tax code, much easier to navigate. I'll be looking at continuation on that. And I would, I think the economic policy framework is important because this is the first year of a third term. We've seen overnight tariffs in the US may well go up on Mexico and Canada and China today on February 1st. The global environment is much more hostile. The economic survey spoke about that. So the framework will be a really important document to lay out a path for in this global environment. How can India get 7% growth? Where should the policy emphasis be? One last thing I'll say, remember, we're forgetting that employment was the overarching objective of the July budget. And it'll be good to get a scorecard on how those employment-linked incentives and internships are done. Will those programs be tweaked? And what will be the budget allocation? So I think there's a lot of very important signals that will come in the budget speech outside of the fiscal math, which is much more constrained.
No, absolutely. We didn't hear anything about those employment. They were going to take up the EPFO and ESI part of some people employed under 15,000 rupees, etc. Though it's not been operationalized. But Samiran, economic policy framework, what should we expect?
So if I take the economic survey's main message to be the driving principle behind the economic policy framework, then it's clearly going to focus on deregulation. There is a huge positive externality that can come out of it. We have all talked about it in the past, but probably never in such a strong and clear way, that how important this is in driving productivity, not only productivity in general, but in particular, it affects the small and medium enterprises the most who are trying to build up their businesses. And that's where it is also important to understand that the whole employment debate that Sajid was referring to, that larger part of that employment happens in that space. Also, the fact that we often talk about India not being able to do as much labor-intensive exports and doing more of high-tech exports. Part of the reason could simply be that the cost of setting up business is so high that the lower margin businesses do not stay competitive. It is only the higher margin businesses which stay competitive. And that could be the reason why the economic policy framework would focus more on deregulation, ease of doing business, and that can cut across all factor markets, land, labor, etc.
All right. Gentlemen, thank you very much, both of you, Sajid and Samiran, for joining us with that perspective as we head into the budget. But not a long wait now. Another 40 minutes and we'll have the budget speech, at least beginning. Now, 50 points on the Nifty, so it's kind of holding on, waiting for that. And we'll have more on the other side. Up next, we will connect with our voices from India Inc. Sanjeev Puri, Rajiv Memani, R. Mukundan, Vinayak Chatterjee. So they'll all be joining Shireen from the CII Budget Headquarters.
Well, here's a fallout of the DeepSeek phenomena. The Indian IT Minister Ashwini Vaishnav making the big announcement that the Chinese large language open source model DeepSeek will be brought to Indian servers, will be brought to Indian shores so that it becomes available to Indian users. Sounds simple? Well, not quite. A lot of jargon there. What does it actually mean? Let's help you break this down to understand what really has transpired with this announcement being coming from Ashwini Vaishnav. Now, let's assume, and I'll explain that with the help of an analogy, the analogy of the humble tea, the common denominator between 2.8 billion Indian and Chinese. Now, let's assume that DeepSeek is this Chinese tea in this cup of tea. Now, what's important is that this is an open source AI model. What that effectively means is that the core code, which is the heart of the model, which is the recipe of the Chinese tea, is publicly available. So what the Indian government is proposing is that we'll use this recipe of the Chinese tea and replicate it here on Indian shores, on Indian servers, and have exactly the same model here present in India for Indian users. But that's not all. Let's bear in mind, we like our masala chai, like most things in life, we like a little tadka in our life. So we'll add a little input to this. We'll add some components. We'll add some sugar. We like some sugar in our tea. We'll definitely add some ginger. We like ginger as well. And let's not forget the milk in the Indian tea. And having done that, we'll come to the finished product, which of course is a humble masala chai, is a humble cutting chai. So why are we doing all of this? Why is Ashwini Vaishnav doing all of this? Well, the long and short is, number one, let's not forget the obvious out of the way, which is the masala chai tastes a lot better. But having addressed with the obvious, the other two key components why the Indian government is doing is number one, all the components that we added, the sugar, the ginger, the milk, what that essentially represents are tweaks that Indian engineers will be able to do on Indian servers to this DeepSeek model. Now, why would we want to do that? Well, let's bear in mind there were niggles with DeepSeek when it initially came out. It wouldn't accurately answer questions about, say, the 1962 war or the status of Arunachal Pradesh. So this masala chai, with all these components, represents tweaks that the Indian engineers will be able to do on the Indian servers so that it becomes slightly more comprehensive. But the second and perhaps a larger concern that the government has is that the government doesn't want you sipping tea from the Chinese cup of tea, as that will leave your imprint, and by your imprint I mean your data with the Chinese servers. What the Indian government is essentially saying, let it come here and have a cup of tea from the Indian cup of tea, the Indian server, so that your imprint, your data stays safe within Indian shores. So this Chai Pe Charcha is the long and short of why the Indian government is bringing DeepSeek on Indian servers to Indian shores.
Welcome back. You're watching our continuing coverage. We are counting down to the budget. 30 minutes to go for the Finance Minister Nirmala Sitharaman to rise to present her 8th budget. It is a record number of consecutive budgets delivered by a Finance Minister. We're here at the Confederation of Indian Industry. Joining me now, Sanjeev Puri, Vinay Chatterjee and Rajiv Memani. Gentlemen, good morning. Many thanks for joining us. Sanjeev Puri, let me start by asking you, CapEx consumption consolidation, what will the Finance Minister prioritize?
I think very clearly, like has been in the past, I think the focus will remain on inclusive and sustainable growth, and that growth through improving productivity of the economy, investments in the economy through public capex. And given the softness in consumption, we do believe there will be some relief provided to middle class by way of either income tax or reduction in duties on petroleum and so on and so forth. So we expect a combination of that, but the thrust of earlier budgets of increasing competitiveness of the economy, the productive capacity, I think that will certainly continue.
On consumption, Sanjeev, and I based this on the question and the comment that came in from the Economic Affairs, the Chief Economic Advisor in his interview with me, when I asked him that how concerned is he about consumption, and he said that, look, we don't believe it's a structural problem. Rural economy has started to show signs of picking up, and we have seen a revival there. Urban is hurting at this point in time, but we don't believe that the consumption issues are a structural problem today. How do you look at the situation?
You see, ultimately, I think consumption is under pressure because of cost of certain items, particularly, the food inflation has been sticky, and that's so because of climate change. And because of that, I think the wallets are stretched. The other thing that stretched the wallets is the higher interest rates. There's a study published also which shows the share of EMI in a consumer's wallet has actually gone up. So there is stress, and that's why I think we are seeing consumption being a little soft. Once these factors are dealt with, and we do expect the interest rates also to moderate in February. Yeah, of course, that has to be preceded by liquidity injection, which has started to happen. Yeah. And both of this should provide relief, and I think some relief in the form of income tax or petroleum products that will provide the.
But any indication of volume growth picking up? And we certainly saw that with Nestle's numbers yesterday. Any indication of volume growth picking up?
Well, rural is doing picking up. Rural is picking up, but urban is still flattish. That's the general sense we have.
Urban flattish at this point in time. Vinay Chatterjee, the bucket man, returns here on CNBC TV 18. How many buckets do you have for us? 7 buckets.
I prepared them because I knew you'd be pulling my leg, So I said Shireen's going to say that.
It is tradition. We can't let go of it.
Yeah. Anyway, I have 7, but I'll concentrate on the top 2. If there's time, I'll run through the balance 5. The real issue before the budget, Shireen, is the tension between controlling the glide path of fiscal deficit versus using infrastructure outlays to pump prime the economy. This is the ultimate tension in the budget. Now, the real question is, where is the Honorable Finance Minister putting her finger on this continuum? Now, last year was a disappointment because after many years of 30% growth in the infra outlay budgets, if you remember the past years, 5 lakh to 7.5, 7.5 to 10, they were all 30% increases. Last year we got only 10% growth. 10 became 11.1. Now, this year, what is the range within which she can play? I mean, if it's going to be as conservative as last year, then we are not going to get infra to pump prime the economy and the slowdown and the capex. And if you get only 10%...
But the government's point of view is that that's not conservative, that is still a pretty high capex number, and it's now time for the private sector to also pick up the baton.
Well, government expenditure in infra leads private capex there. So the government, and remember, the government itself is touting the figure that 1 rupee spent on infrastructure results in 3 rupees of GDP, and 1 rupee spent on direct benefit transfer kind of expenditures results in 90 paisa of GDP. So the maths is very clear. If you want infra to pump prime the economy, particularly now when there are already talk of slowdown in capex, slowdown in GDP, then where are we going to see the FM put her finger? If she's going to be aggressive and go for a 25% increase in the infra outlay, then we are going to get 14 lakh crores as the budgetary outlay over 11.1 last year. And if she's going to be conservative, then we are going to get 12 lakh crores. So I'm keen to see where the government takes a stand. And the second point, and I'm going to stop very quickly after mentioning this, last time there was a hint in her budget speech. She said that the core infrastructure areas have reached a certain level of maturity and self-sustainability, which is largely transport and energy. And that she said other sectors of the economy now require attention. So I'm also keen to see in her budget announcements this time the interplay of the outlays between core and social infrastructure. And social meaning health, education, agriculture. I'm stopping here. The balance 5, if we have time.
I'll come to you very quickly for the balance 5 in just a second. But 12 to 14 lakh crores, that's the range that you're working with this time around as far as capex is concerned. On the tax front, if she needs to deliver on the range that Binayak Chatterjee has just articulated, how much room does she have to do more than just provide sweeteners on the tax front?
Yeah, on the tax front, my view is that at least on the personal tax side, last 3 years, Shireen, the growth in personal tax revenues has been more than 20%. So at least on the personal tax side, and if you have to provide some fillip to consumption, and also from an equity standpoint, given the way lower income and middle income people have been hit because of inflation and other things, I think the government should provide relief at those levels. So I do believe that the government will be providing relief. What's the extent of relief? I think that we'll have to see. And you're right. I think that I think the fiscal glide path has to be maintained.
But do you think that they'll move on the rate and the slab, or do you think that will be more by way of exemptions?
No. I think they will go with the new tax scheme.
Yeah, absolutely. On the new tax scheme, bring in exemptions, or do you think that move as far as the rates slabs are concerned?
No, there are 3 levers. Either there is the tax rebate, so you can move that up. Standard deduction, then that impacts everything. Or you move the slab up, that the peak rate which comes at 15 lakhs, that moves up slightly. So I don't know which they'll apply, but my sense is that the rebate amount that is there, they may increase that because that gives relief at that level, and a little bit increase on the standard deduction side, because they won't want to tamper anything that changes with the number of people who are filing tax returns, because that's been one of the reasons that they want to track that number very closely.
On the corporate side, we saw changes as far as capital gains were concerned. The expectation is that given where the markets are, maybe they might provide a fillip by a cut. Do you expect that at all?
No. It may happen.
SET,
I don't expect
anything?
I don't expect. I think also if you see, Shireen, this government, they have not made too many, if I compare them with the earlier budgets, where you used to have lots of changes in tax. Now you have limited issues, so the direction is pretty clear in the way they want to go at it. So I don't anticipate too many changes. I do hope that they present the new tax draft income tax act to be opened up for discussion, and also be probably to put place in front of the standing committee, and then that will lead to real simplification. So a lot of the tax issues may be around simplification, and on corporate tax side.
That's the indication. But on this business of the global context and responding to the global context under Trump administration, the threat of tariffs today is probably going to be the day where we see the first set of tariffs being imposed on Canada, Mexico, and perhaps even China. But Sanjeev Puri, from a manufacturing standpoint, from an FDI standpoint, what's the expectation, not just in terms of signaling, but also in terms of tangible steps? What do you expect?
So, this is a very difficult situation in the global context today. And therefore, we have to put in a lot more focus on the domestic drivers of competitiveness, which is what the Chief Economic Advisor also alluded to. So focus on competitiveness on sectors where we can really win and become a global hub. Second is, I think, this business of tariffs, or the complicated tariff walls that are emerging. This has been happening in the past, and we are seeing more of it happen. So really, we will have to really progress on FTAs. I think that's a way out, and use that route to integrate with global value chains. And the third is, I think, while it's not to do with tariffs, but there's also an issue of excess capacities in certain geographies that are dumping stocks all over and therefore limiting opportunities. So we have to deal with that unfair competition. We need to have an agile response. So really in three parts. I think one is to focus on sectors where we have potential, where the world has potential, and some of it we spoke about also yesterday. Second is FTAs, and third is really to have agile responses to these issues of dumping. That's very, all these three are critical for manufacturing.
Anything specific on the Make in India agenda, bringing back the concessional scheme for new manufacturing units, perhaps some allowances even for corporates to expand existing units and so on and so forth? Anything there on Make in India 3.0?
So look, anything concessional is always welcome by industry.
But is that
I'll really, if I was to really put it down, let me say that the balance sheets of corporates, the balance sheets of the financial system, they're in strong position, right? Corporate income tax rates were rationalized in the past. I think the big things to deal with right now are ease of doing business, cost of doing business, flexibility in labor regulations. A lot of it fall in this, in the ambit of the state. It's to provide specific targeted impetus to sectors that are labor intensive. See how we can pump prime agriculture even further. And this is the sector that the economic survey spoke about.
Absolutely.
To deal with the issue of resilience, because that feeds into inflation and then consumption.
It's interesting to see the mood here in industry is measured and tempered when it comes to things like, reductions or allowances or further incentives to India Inc. And that's because the survey made it clear corporate profitability has been at a 15-year high. But of course, the situation is looking a little bit more challenging now in terms of that, but a measured response. One final bucket before I let you go, and we'll toss it back to Bombay. Vinayak.
Final bucket would be a policy statement long overdue of a reduction of the 28% GST on the Aam Aadmi product called cement, which everybody considers irrational.
But it cannot be part of the budget. So
no, it can be part of a budgetary policy announcement. It's going to spur cost effectiveness in infrastructure. It will help Aam Aadmi, and it cannot be equated with pan masala, cement.
No. And there's a lot in that 28% bucket that needs to be addressed, but the budget perhaps is not going to veer into the GST territory at all. That will be for the GST Council. But gentlemen, we will check back in with you on how much of this is actually delivered by the Finance Minister. As always, many thanks for joining us here at the CNBC TV 18 Budget Headquarters. Guys, it's back to you.
All right, Shireen, thank you very much for that. That's an interesting discussion, and there is a lot going on in the markets as well. I mean, just sort of anticipating. And there are lots of moves, individual moves. How much will be validated, of course, is the question we'll have to wait and watch out for. That's a 0.25% higher for now, as far as the index is concerned. Kiki Mistry is with us, former Vice Chair and CEO of HDFC. Mr. Mistry, it's always great to have you on an important day like the budget, as you've been with us in the past as well. So great to see you again. Just 20 minutes to go, and we'll have the budget speech starting. Visuals are already coming in. The Finance Minister in the Parliament. And those are live visuals which are coming in as we speak. We'll stay with the visuals. But Mr. Mistry, let me ask you, top of mind, 2 or 3 things in terms of, I mean, there are lots of asks, but in terms of real expectations, what would those be?
I would say growth, focus on growth. Second is focus on job creation. Third is leave money in the hands of people for consumption, to improve consumption in the economy. And the fourth, if you ask me, would be some reforms for the capital market.
Capital market reforms. Well, capital gains tax, I doubt they'll touch, will they, Mr. Mistry?
I don't know. I think some kind of, if we could have some kind of consistency in the tax rules, it would help a lot.
Can you be a little more specific? What could be your ask?
I'm saying if you were to say that the capital gains, the maximum, the capital gains, long-term capital gains now is going to be 12.5%. And that is the way it's going to be for the next X number of years, rather than keep, shuffling and making changes.
That's possible because she's also promised an economic policy framework announcement. So it's possible that something long-term will be announced there. But Mr. Mistry, let me come back to your own love, housing. I don't know when with the new tax regime, whether specific incentives can be announced for higher interest, higher principal set-offs and stuff like that. But overall, can housing expect something?
I think housing should expect something because housing is a big employment generator.
Yes.
And we know that employment, creation of jobs is such an important facet of the budget. So there are certain policy decisions that could be taken. Like, for example, if there is a PME 2 scheme,
We had a Prime Minister's Awas Yojana Scheme 1, which was extremely successful 5 or 6 years ago. Did very, very well. Now, if we were to have a PMA 2, and that stretches to urban areas, then I think that would be a huge help to to the housing sector. Also, digitization of land records will help the rural economy. So there are many things like that can be done. Like take, for example, rental market. In India, we look only at people staying in the house, but in the Western world, a lot of people buy property with the idea of leasing it out, renting it out. Now, if you rent it out, the interest that you pay on the loan is capped at 2 lakh rupees, which, is not going to make too much of sense. So that limit needs to be removed. There are things like that can be done, which could be done for the housing sector
Mr.
without
Mistry,
interest rates.
Got it. Just to tie in that point, you were about to say something on capital gains. Did you want to add something?
I wanted to talk about dividend. I mean, it's a long-drawn topic. We've talked about it multiple times. But if you really look at it, the dividend is getting taxed twice. The company is paying 25% tax on the dividend that it pays out because it's not getting a deduction on the dividend that they pay. And the individual is paying tax on dividend at the marginal tax rate. So if your tax rate, for example, is 30%, you're paying 30% tax plus 25% tax paid by the company. Now, plus, of course, the surcharge. So if we were to say that we tax dividend at the maximum marginal tax rate applicable to individuals, which currently is 30% plus surcharge, then the tax on dividend should really be curtailed to 5%. So then you're still taxing dividend at the maximum marginal tax rate.
Yeah.
Okay, Mr. Mistry, on capital gains, I think because it is at 12.5, right? It's the thing. I think that is the number. It's the 10, 15, or maybe it'll go to 15. You're not expecting a reduction, right? I mean, you're saying just clarity. Just
clarity that it will remain like this. I don't think I expect a reduction.
No, last year, there were a lot of people who were saying 12.5 looks like such an unstable number. Will they make it 15? You don't have such fears, do you?
I don't. I really don't, because I think we've seen a lot of middle income and below middle income people now investing in equity markets. And if you want to, already we've seen some pressure on equity markets in recent times. So in my opinion, I don't think there will be any change.
In terms of, the CE, the economic, the report yesterday, a survey also kind of alluded to it, right? Taxes have been cut in 2018-19 from 35 to 25%. And, the CE exhorting corporates to come in, participate, invest. Is there anything of that which kind of shows up in the budget in some way? I don't know how, but will that message be felt through the budget?
I think so. I think if we are to get growth into the system, but basically the idea is to create jobs. Now, how do you create jobs? You invest, you create more capacity, whether it is in infrastructure or in other industries. So some incentives for creating that extra capacity is something which I think is very, very much possible.
Okay. All right, Mr. Mistry, I hope they're listening. There's hardly any time, not much time for tweaks at least. But these, of course, especially the dividend point you're making, has been made, and let's see whether we have heard. We'll speak with you after the budget. Thank you very much indeed for joining us today. Okay, the market's in the green, so clearly there is some kind of an expectation. To be fair, of course, positions were also light. So let's get some final words from top stock market experts joining us now. Sandeep Bhatia, the Managing Director, Head of Equity India at Macquarie Capital. Dinesh Kanabar will be with us in a bit, the CEO of Dhruva Advisors. And we will also have Mahesh Nandurkar, Managing Director and Head of Research at Jefferies. Mahesh, Sandeep, Mr. Kanabar, thank you very much. Sandeep, what's the sense? I mean, have you bought or have you advised buying something before the budget in expectation of some sectors getting benefited?
So, the budgets are a lot of hype. Most of the times it's a big show when very little go. So it's not that we would say that buy this for the budget. I think, as most of the panelists before me have echoed, the corporate sector has done structurally well in terms of profit and margins and cash flows. The banking sector is strong. The one part of the economy actually which is not done well is the household sector, and especially the middle income and poorer households. So I think if we see impetus to consumption,
That itself will spur private capex, what we have not seen for some time, and we may not see if demand doesn't come back, is private capex. So I would be very happy if there is a spur to consumption. That's what I would expect from the budget. There is very little space otherwise to do something major. Given the fiscal glide path we are on, we need to control our fiscal deficit and gross borrowings. But definitely the surcharges which have been imposed and which need to go away, we can have some concessions there.
In what way? You said a boost to consumption you like. In what way, Sandeep?
Well, raise the minimum, the level at which tax starts coming in. So make it above, let's say, 1 lakh a month, 12 lakh, something like that. That would mean that if you're earning less than 1 lakh a month, you're not paying any taxes. So something like that. Plus, let's see if they can do anything on employment generation, incentivize corporates for employment generation. That is definitely needed. In my discussions with various senior economists of the government, they have noted the fact that the headcount growth has severely lagged behind the profit and earnings growth in the corporate sector over the last 7 to 10 years.
And the economic survey also mentions, the CA made that point yesterday as well, Sandeep. So in what way? Because further incentivization.
Yeah, I think there would be some way of saying that if you don't create a certain number of jobs over a period of time according to your top line growth or something, then your tax rates could go up. I think it has to be done very, very carefully because that can create more bureaucracy. But at least a push towards more formal employment will be necessary. I hope it is done without doing much damage. So I think some kind of a conversation also is important, and that has started.
Okay, actually, on that same point, let me get Mahesh Nandurkar in from Jefferies. Mahesh, do you think that we should and will get any stimulation for consumption?
So first of all, I would like to say that we are still in the fiscal consolidation mode. From the post-COVID era, we have already reduced our fiscal deficit by more than 400 basis points. But I think each year, even from here on, and specifically in FY26, we would be looking at a 30-40 basis point reduction in the fiscal deficit. And given the fact that the revenue growth is unlikely to be more than 10% for the government of India, my belief is that the total expenditure growth is going to be, say, around 8% to 9% kind of mark. So that's the overall constraint within which I think we will have to view our expectations. So I think that the government has already done a lot of heavy lifting on the capex side. In the last 5 years, the capex has grown 3x, and it is quite natural to expect some kind of shift in that, away from capex growth into consumption growth. But I think overall the limitation is going to be 8 to 9% total growth. So in that context, however, the government may like to give a big boost, but I think it will come with its own limitations.
Okay, all right. Mahesh is well put. Sunil Kaul is with us as well, Global Emerging Market Equity Strategist at Goldman Sachs, who's with us. Sunil, let me start by asking you, there is a lot of expectation that there could be further focus on public capex. Your report, though, says growth pace for capex is now behind us. What is your thinking and what are you expecting?
No, I think that's right, because, as we know, the government actually increased capex spending at a rate of 30% CAGR between sort of calendar 21 to 2023, those 3 years, and took the fiscal spending as a percent of GDP from 1.5 to north of 3%, 3.2, 3.3%. So there has been a lot of fiscal spending that the government has done in prior years. And our strong view, even coming into last year, was that those growth rates are unlikely to sustain. And so the government will reduce the spending on fiscal more in line with nominal GDP, which is what they announced in the last budget as well. But I think this time also we'll think that the allocations to fiscal spending would be in line with sort of high, sort of low double digits of 10-11%, which is in line with the nominal GDP. So they will effectively keep the fiscal spending as a percent of GDP somewhat constant at around 3% of GDP.
Yeah, absolutely, Sunil. And that view really stands out because you're not expecting a decided uptick, continued uptick in the capex spend. Mr. Kanabar, coming back to you now, we discussed the big expectation on income tax earlier, but I want to move beyond that as well. Aside of that, what are the other major things that you would watch out for? There's been so much of a clamor for simplification, for reducing litigation, the TDS regime, TCS and TCS rates. Would you expect anything else?
So even if I think the issue really is the cost of compliance, and the cost of compliance is just going up and up and up. And when we spoke earlier about TDS and TCS, the question is it really doing any benefit to have such a lot of litigation? And coming to litigation, I think the issue really is that today we have a backlog in the tax department, which is enormous. So just at a first appeal level, you have almost a 5 to 6 year waiting, which is unheard of and which has not been there for the last 15 years. The first time we are seeing such a lot of backlog, which essentially means that if there is an addition at the tax office level, the tax office collects 20%. The taxpayer believes he is out of pocket with that 20% unnecessarily. And should the taxpayer actually lose out, the government is out of pocket on 80%, and you can't have this situation continuing. A number of suggestions have been made in this regard, whether one can go directly to a tribunal, whether more cases can go to DRP. And I'll be waiting with bated breath to see what comes out of it. And those are very, very welcome things.
Okay. All right. On the rates per se, on the multiple TDS rates, just in 10 seconds, Mr. Kanabar, what are the changes you'd expect?
So the point really is that you have a tax rate for salaried employees, which is equal to their income so that they don't need to file a tax return. Then you have a higher TDS rate for lotteries and crypto and whatever else. And then all the other TDS, can it not be a one simple rate so that one is not really litigating with the tax office as to what is the applicable section? Should the withholding be at 2% or 5% or 10%?
Okay. Well, let's see what comes. Sandeep, well, finally, at the moment, what is attracting you in the market?
I think at the moment, one should look. So my assumption is that we'll see some tax cuts. So I think we can look at beneficiaries of tax cuts. I think to that extent, Maruti looks interesting in the near term post-budget. If we do see a tax cut, small cars have been lagging. We all know that. At least sentimentally, these tax cuts can help. But there's also a pay revision commission, which has been announced by the government. Pay revisions will come through next year. So I think Maruti looks interesting at these levels. Other than that, it comes down to what happens in geopolitics. We have Trump and Modi meeting each other in February in the White House. I do expect some kind of a mini trade deal to come through. It's difficult to play this, but I think the Indian pharma sector is generally a beneficiary. So if we don't see any disruption, we definitely like Sun Pharma. Mm-hmm. So that's something. Otherwise, the private sector banks, I think the banking sector is a consensus call. I don't claim any special insight here. Uh-huh. But some of the beaten down banks, such as Axis Bank or IndusInd Bank, could definitely look interesting because the system stability is definitely very strong.
Okay. All right. We are just about less than 10 minutes to the budget. Gentlemen, thank you very much for being with us. Shireen, last few thoughts from your guests?
Yeah, Lata, actually, we're 4 minutes away from the finance minister rising to present the budget speech. We've got our budget editors with us, Atanu Chakrabarti and Ratin Roy. By the way, there's a multilingual conversation happening here between the two of them. There's Bengali, there's Gujarati, there's Marathi. So I've been enjoying this multilingual budget banter that's taking place here with our budget editors. But Mr. Chakrabarti, to the point that was being made there, from a banking sector's perspective, from a financial services sector's perspective, what are you looking at the budget for?
Frankly, the major thing which really matters for the banking sector today is the savings, household savings, which have been eaten into by inflation. So most of the bankers would be looking at the fiscal deficit number and whether the debt containment happens, as I'd mentioned yesterday as well. this year, and maybe reduction possibly next year even. And the glide path, I wish, is even steeper, but at least glide path is followed. That will send the right signal for inflationary expectations. That will improve the savings. That doesn't eat into the wages. People would be willing to invest, increases wages across, improves savings, improves even velocity of money. That's what bankers look at.
Well, speaking of the velocity of money, if we get that rate cut, first of all, do you believe we're getting a rate cut in February? If we do get that rate cut, do you expect that this encouraging signs of a pickup as far as private capex is concerned, that's likely to get a leg up?
Frankly, people would go by, because there are different benchmarks that bankers use. And if inflation is low, most of them have pegged their rates either to 2-year bonds or 5-year bonds. So there the yields would come down and the rates would properly settle down. Whether rate cut itself would transmit into that or not would depend upon, frankly, the rate of inflation.
On the global scenario, Ratan, and we were just discussing this, President Trump and Prime Minister Modi expected to meet. There is the possibility of some sort of a move ahead as far as a mini trade deal is concerned, etc. Do you believe that this budget is going to address, at least signal, anything on that front, on the global scenario? Is it likely to address even what's happening as far as the rupee depreciation with respect to the dollar is concerned?
I don't think so, because that's not the job of the budget. However, I think that I would expect the finance minister to at least comment on how India will navigate what promises to be a very turbulent year in terms of our bilateral and multilateral relationships, as the economic survey highlighted. So getting an endorsement of what the economic survey said, which is skillful, negotiated progress on the international front, would be important. And foreign investors will be looking more or less for the same kind of reassurance that Otanu was saying domestic investors will be looking at. You want a steady hand, you want a lower fiscal deficit, you don't really want to see any particular need to increase subsidies, and you want tax cuts to be moderated and not paid for by increased fiscal deficits, paid for ideally by lower public expenditure. So I think a steady budget would serve us best globally. India is fortunate amongst all the emerging economies at the moment to be one of the steadiest emerging economies. It is vital that we retain that, because then the costs of the US imposing unilaterally tariffs or other constraints on us would be that much higher, since we're the only stable, steady, democratic emerging economy at present on this planet.
Yes,
I mean, just add a point here, since from the domestic perspective, but however, we also have another jurisdiction called gift jurisdiction.
Yes.
And now a lot of transactions, a lot of money has started moving into this. And but when the money moves in and out of the country, it tends to move directly back to Singapore or to Hong Kong. It needs to rest in gift. And gift possibly, maybe it's my wish, someday a separate chapter in our tax code gets written for that. So that there's a tax stability assurance in the mind. Today is through that ACZ rules and so on and so forth. That would set the ball rolling, because there are a lot of HNI investors, there are a lot of others, there are a lot of PE funds who are setting up their base there.
I'm sure that this is feedback that has been sent to the government. Have you heard anything on whether this is even an active consideration?
We can only hear today.
we'll only hear today.
But that's a wish, and I guess that those kind of feedback must have been gone, and I'm sure maybe a lot of things are work in progress always.
I would not be politically comfortable with this happening with gift. There's already too much talk about Gujarati oligarchies, and this would only add to that topic.
Well, gentlemen, I'm going to have to ask you to take a pause, because the finance minister rising in Parliament to present Budget 2025. This is going to be her 8th budget, 8th consecutive budget. On CNBC TV 18, we're calling it Seize the Moment. Will the budget capture the global context as well as unleash the animal spirits of the domestic industry? That's the big question. That is the action from Lok Sabha, the Speaker calling the House to order, and in just a moment from now you will see Finance Minister Nirmala Sitharaman rise to present the Union Budget.
Notice that. So, Dashragan, budget बजट के बाद राज्यपाल अभिभाषण में आपको पर्याप्त दूंगा। मेरा आपसे निवेदन है, नहीं माननीय अखिलेश जी, आपने संसद की मर्यादा को आप बना के रखे हैं। कभी बजट भाषण के अंदर इस तरीके का नहीं हुआ, ये उचित नहीं है, ये उचित नहीं है। अखिलेश जी प्लीज, मैं आपको मौका दूंगा राज्यपाल अभिभाषण पे, प्लीज। नो, ये तरीका ठीक नहीं है। नो, राज्यपाल अभिभाषण पे चर्चा होगी। नो तरीका।
Honorable Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, "Deshamante matti kadoy, deshamante manushuloy," meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas focusing on Garib, youth, Annadata and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our 4 powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms. Agriculture as the first engine. Now I move to specific proposals, beginning with agriculture as the first engine. Prime Minister Dhan Dhanya Krishi Yojana, Developing Agri-Districts Program. Motivated by the success of the Aspirational District Program, our government will undertake a Prime Minister Dhan Dhanya Krishi Yojana in partnership with states. Through the convergence of existing schemes and specialized measures, the program will cover 100 districts with low productivity, moderate crop intensity, and below average credit parameters. It aims to 1. Enhance agricultural productivity, 2. Adopt crop diversification and sustainable agricultural practices, 3. Augment post-harvest storage at the panchayat and block level, 4. Improve irrigation facilities, and 5. Facilitate availability of long-term and short-term credit. This program is likely to help 1.7 crore farmers. Building rural prosperity and resilience. A comprehensive multi-sectoral rural prosperity and resilience program will be launched in partnership with the states. This will address underemployment in agriculture through skilling, investment, technology, and invigorating the rural economy. The goal is to generate ample opportunities in rural areas so that migration is an option but not a necessity. The program will focus on rural women, young farmers, rural youth, marginal and small farmers, and landless families. The details are in Annexure A. Domestic best practices will be incorporated, and appropriate technical and financial assistance will be sought from multilateral development banks. In phase 1, 100 developing agri-districts will be covered. Atmanirbharta in pulses. Our government is implementing the National Mission for Edible Oilseed for achieving Atmanirbharta in edible oils. Our farmers have the capability to grow enough for our needs and more. 10 years ago, we made concerted efforts and succeeded in achieving near self-sufficiency in pulses. Farmers responded to the need by increasing the cultivated area by 50%, and government arranged for procurement and remunerative prices. Since then, with rising incomes and better affordability, our consumption of pulses has increased significantly. Our government will now launch a 6-year mission for Atmanirbharta in pulses with a special focus on Tur, Urad and Masoor. Details are in Annexure B. Central agencies such as NAFED and NCCF will be ready to procure these 3 pulses as much as offered during the next 4 years from farmers who register with these agencies and enter into agreements. Comprehensive program for vegetables and fruits. It is encouraging that our people are increasingly becoming aware of their nutritional needs. It is a sign of a society becoming healthier. With rising income levels, the consumption of vegetables, fruits, and Shri Anna is increasing significantly. A comprehensive program to promote production, efficient supplies, processing, and remunerative prices for farmers will be launched in partnership with the states. Appropriate institutional mechanisms for implementation and participation of farmer producer organizations and cooperatives will be set up. Makhana Board in Bihar. For this, there is a special opportunity for the people of Bihar. A Makhana Board will be established in the state to improve production, processing, value addition, and marketing of makhana. The people engaged in these activities will be organized into FPOs. The board will provide hand-holding and training support to makhana farmers, and will also work to ensure they receive the benefits of all relevant government schemes. A national mission on high-yielding seeds will be launched, aimed at 1. Strengthening research ecosystem, 2. Targeted development and propagation of seeds with high yield, pest resistance, and climate resilience, and 3. Commercial availability of more than 100 seed varieties released since July 2024. India ranks second largest globally in fish production and aquaculture. Seafood exports are valued at 60,000 crore rupees. To unlock the untapped potential of the marine sector, our government will bring in an enabling framework for sustainable harnessing of fisheries from Indian exclusive economic zone and high seas, with a special focus on the Andaman and Nicobar and Lakshadweep Islands. For the benefit of lakhs of cotton growing farmers, I am pleased to announce a mission for cotton productivity. This 5-year mission will facilitate significant improvements in productivity and sustainability of cotton farming and promote extra long staple cotton varieties. The best of science and technology support will be provided to farmers. Aligned with our integrated 5F vision for the textile sector, this will help in increasing incomes of the farmers and ensure a steady supply of quality cotton for rejuvenating India's traditional textile sector. Kisan credit cards facilitate short-term loans for 7.7 crore farmers, fishermen, and dairy farmers. The loan limit under modified interest subvention scheme will be enhanced from 3 lakh rupees to 5 lakh rupees for loans taken through the KCC. For Atmanirbharta in urea production, our government had reopened 3 dormant urea plants in the eastern region. To further augment urea supply, a plant with annual capacity of 12.7 lakh metric tons will be set up at Namrup in Assam. India Post, with 1.5 lakh rural post offices, complemented by the India Post Payment Bank and a vast network of 2.4 lakh Dak Sevaks, will be repositioned to act as a catalyst for the rural economy. Details are at Annexure C. India Post will also be transformed as a large public logistics organization. This will meet the rising needs of Vishwakarmas, new entrepreneurs, women, self-help groups, MSMEs, and the large business organizations. Our government will provide support to NCDC for its lending operations for the cooperative sector. MSMEs as the second engine. Now I move to MSMEs as the second engine, which encompasses manufacturing and services with a focus on MSMEs numbering 5.7 crores. Currently, over 1 crore registered MSMEs, employing 7.5 crore people, and generating 36% of our manufacturing, have come together to position India as a global manufacturing hub. With their quality products, these MSMEs are responsible for 45% of our exports. To help them achieve higher efficiencies of scale, technological upgradation, and better access to capital, the investment and turnover limits for classification of all MSMEs will be enhanced to 2.5 and 2 times respectively. This will give them the confidence to grow and generate employment for our youth. The details are given in Annexure D. To improve access to credit, the credit guarantee cover will be enhanced. First, for micro and small enterprises from 5 crore to 10 crore rupees, leading to additional credit of 1.5 lakh crores in the next 5 years. Second, for startups from 10 crore rupees to 20 crore rupees, with the guarantee fee being moderated to 1% for loans in 27 focus sectors which are important for Atmanirbhar Bharat. And for well-run exporter MSMEs, for term loans up to 20 crore rupees. Also for the micro enterprises, we will introduce customized credit cards with a 5 lakh rupee limit for micro enterprises registered on Udyam portal. In the first year, 10 lakh such cards will be issued. Fund of funds for startups. The alternate investment fund, AIFs, for startups have received commitments of more than 91,000 crores rupees. These are supported by the fund of funds set up with the Government of India's contribution of 10,000 crore rupees. Now, a new fund of funds with expanded scope and a fresh contribution of another 10,000 crore rupees will be set up. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. This will provide term loans up to 2 crore rupees during the next 5 years. The scheme will incorporate lessons from the successful Stand Up India scheme. Online capacity building for entrepreneurship and managerial skills will also be organized. Measures for labor-intensive sectors. To promote employment and entrepreneurship opportunities in labor-intensive sectors, our government will undertake specific policy and facilitation measures. To enhance the productivity, quality, and competitiveness of India's footwear and leather sector, a focused product scheme will be implemented. The scheme will support design capacity, component manufacturing, and machinery required for production of non-leather quality footwear, besides the support for leather footwear and products. The scheme is expected to facilitate employment for 22 lakh persons, generate over 4 lakh crore rupees, and exports of over 1.1 lakh crore rupees. Measures for the toys sector. Building on the National Action Plan for Toys, we will implement a scheme to make India a global hub for toys. The scheme will focus on development of clusters, skills, and a manufacturing ecosystem that will create high-quality, unique, innovative, and sustainable toys that will represent the Made in India brand. Support for food processing. In line with our commitment towards Purvodaya, we will establish a National Institute of Food Technology, Entrepreneurship and Management in Bihar. The institute will provide a strong fillip to food processing activities in the entire eastern region. This will result in 1. Enhanced income for the farmers through value addition to their produce, and 2. Skilling entrepreneurship and employment opportunities for the youth. Manufacturing mission, furthering Make in India. Our government will set up a national manufacturing mission covering small, medium and large industries for furthering Make in India by providing policy support, execution roadmaps, governance and monitoring framework for central ministries and states. Details are in Annexure E. Given our commitment to climate-friendly development, the mission will also support clean tech manufacturing. This will aim to improve domestic value addition and build our ecosystem for solar PV cells, EV batteries, motors and controllers, electrolyzers, wind turbines, very high voltage transmission equipment and grid scale batteries. Investment as the third engine. Now I move to investment as the third engine, which encompasses investing in people, investing in the economy, and investing in innovation. Investing in people. Saksham Anganwadi and Poshan 2.0. Saksham Anganwadi and Poshan 2.0 program provides nutritional support to more than 8 crore children, 1 crore pregnant women and lactating mothers all over the country, and about 20 lakh adolescent girls in aspirational districts and the Northeast region. The cost norms for these nutritional support will be enhanced appropriately. Atal Tinkering Labs. 50,000 Atal Tinkering Labs will be set up in government schools in the next 5 years to cultivate the spirit of curiosity and innovation and foster a scientific temper among young minds. Broadband connectivity to government secondary schools and PHCs. Broadband connectivity will be provided to all government secondary schools and primary health centers in rural areas under the BharatNet project. Bharatiya Bhasha Pustak Scheme. We propose to implement a Bharatiya Bhasha Pustak scheme to provide digital form Indian language books for schools and for higher education. This aims to help students understand their subjects better and in their language. National Centers of Excellence for Skilling. Building on the initiative announced in the July 24 budget, 5 National Centers of Excellence for Skilling will be set up with global expertise and partnerships to equip our youth with the skills required for Make for India, Make for the World manufacturing. The partnership will cover curriculum design, training of trainers, and a skills certification framework and periodic reviews. Expansion of capacity in IITs. Total number of students in 23 IITs has increased 100% from 65,000 to 1.35 lakh in the past 10 years. Additional infrastructure will be created in the 5 IITs started after 2014 to facilitate education for 6,500 more students. Hostel and other infrastructure capacity at IIT Patna will also be expanded. Center of Excellence. Center of Excellence in AI for Education. I had announced 3 centers of excellence in artificial intelligence for agriculture, health, and sustainable cities in 2023. Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores. Expansion of medical education. Our government has added almost 1.1 lakh undergraduate and postgraduate medical education seats in 10 years, an increase of 130%. In the next year, 10,000 additional seats will be added in medical colleges and hospitals towards the goal of adding 75,000 seats in the next 5 years. Daycare cancer centers in all district hospitals. Our government will facilitate setting up of daycare cancer centers in all district hospitals in the next 3 years. 200 centers will be established in 25-26 itself. Strengthening urban livelihoods. Our government has been giving priority to assisting urban poor and vulnerable groups. A scheme for socio-economic upliftment of urban workers will be implemented to help them improve their incomes, have sustainable livelihoods, and a better quality of life. PM Swanidhi scheme has benefited more than 68 lakh street vendors, giving them respite from high-interest informal sector loans. Building on this success, the scheme will be revamped with enhanced loans from banks, UPI-linked credit cards with 30,000 rupees limit, and capacity building support. Social Security Scheme for welfare of online platform workers. Gig workers of online platforms provide great dynamism to the new age services economy. Recognizing their contribution, our government will arrange for their identity cards and registration on the e-Shram portal. They will be provided healthcare under PM Jan Arogya Yojana. This measure is likely to assist nearly 1 crore gig workers. Investing in the economy. Public-private partnership in infrastructure. Each infrastructure-related ministry will come up with a 3-year pipeline of projects that can be implemented in PPP mode. States will also be encouraged to do so and can seek support from the India Infrastructure Project Development Fund, which is a scheme to prepare PPP proposals. Support to states for infrastructure. An outlay of 1.5 lakh crore is proposed for the 50-year interest-free loans to states for capital expenditure and incentives for reforms. Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects. Regulatory and fiscal measures will be fine-tuned to support the plan. Jal Jeevan Mission. Since 2019, 15 crore households, representing 80% of India's rural population, have been provided access to portable tap water connections. To achieve 100% coverage, I am pleased to announce the extension of this mission until 2028 with an enhanced total outlay. The mission's focus will be on the quality of infrastructure and O&M of rural piped water supply schemes through Jan Bhagidari. A separate MOU or separate MOUs will be signed with the states and union territories to ensure sustainability and citizen-centric water services delivery. Urban sector reforms. Building on the July budget proposals, urban sector reforms related to governance, municipal services, urban land and planning will be incentivized. Urban Challenge Fund. The government will set up an urban challenge fund of 1 lakh crore rupees to implement the proposals for cities as growth hubs, creative redevelopment of cities, and for water and sanitation purposes announced in the July budget. This fund will finance up to 25% of the cost of bankable projects, with a stipulation that at least 50% of the cost is funded from bonds, bank loans, and PPPs. An allocation of 10,000 crore is proposed in 2025-26. Power sector reforms. We will incentivize electricity distribution reforms and augmentation of intrastate transmission capacity by states. This will improve financial health and capacity of electricity companies. Additional borrowing of 0.5% of GSDP will be allowed to states contingent on these reforms. Nuclear energy mission for Vikasit Bharat. Development of at least 100 gigawatt of nuclear energy by 2047 is essential for our energy transition efforts. For an active partnership with the private sector towards this goal, amendments to the Atomic Energy Act and the Civil Liability for Nuclear Damage Act will be taken up. A nuclear energy mission for research and development of small modular reactors with an outlay of 20,000 crore will be set up. At least 5 indigenously developed small modular reactors will be operationalized by 2033. Shipbuilding. The shipbuilding financial assistance policy will be revamped to address cost disadvantages. This will also include credit notes for shipbreaking in Indian yards to promote the circular economy. Large ships above a specified size will be included in the infrastructure harmonized master list. Shipbuilding clusters will be facilitated to increase the range, categories, and capacity of ships. This will include additional infrastructure, facilities, skilling, and technology to develop the entire ecosystem. Maritime Development Fund. For long-term financing for the maritime industry, a Maritime Development Fund with a corpus of 25,000 crore rupees will be set up. This will be for distributed support and promoting competition. This will have up to 49% contribution by the government, and the balance will be mobilized from ports and from private sector. UDAN regional connectivity schemes. UDAN has enabled 1.5 crore middle-class people to meet their aspirations for speedier travel. The scheme has connected 88 airports, and operationalized 619 routes. Inspired by that success, a modified UDAN scheme will be launched to enhance regional connectivity to 120 new destinations and carry 4 crore passengers in the next 10 years. 4 crore additional passengers in the next 10 years. The scheme will also support helipads and smaller airports in hilly, aspirational, and northeast regional districts. Greenfield airports will be facilitated in Bihar to meet the future needs of the state. These will be in addition to the expansion of the capacity of Patna Airport and a brownfield airport in Beta. Western Kosi Canal project in Mithilanchal. Financial support will be provided for the Western Kosi Canal ERM project, benefiting a large number of farmers, cultivating over 50,000 hectares of land in the Mithilanchal region of Bihar. Mining sector reforms. Mining sector reforms, including those for minor minerals, will be encouraged through sharing of best practices and institutions of a state mining index. A policy for recovery of critical minerals from tailings will be brought out. Under the special window for affordable and mid-income housing, SWAMI, 50,000 dwelling units in stressed housing projects have been completed, and keys handed over to home buyers. Another 40,000 units will be completed in 2025, further helping middle-class families who are paying EMIs on loans taken for apartments while also paying rent for their current dwellings. Building on this success, Swami Fund 2 will be established as a blended finance facility with contribution from the government, banks and private investors. This fund of 15,000 crore rupees will aim for expeditious completion of another 1 lakh units. PM Gati Shakti data for private sector. For furthering PPPs and assisting the private sector in project planning, access to relevant data and maps from the PM Gati Shakti portal will be provided. Tourism for employment-led growth. Top 50 tourist destination sites in the country will be developed in partnership with states through a challenge mode. Land for building key infrastructure will have to be provided by the states. Hotels in these destinations will be included in the infrastructure harmonized list. The following measures will be taken for facilitating employment-led growth. Organizing intensive skill development programs for our youth, including in institutes of hospitality management. Providing mudra loans for homestays. Improving ease of travel and connectivity to tourist destinations. Providing performance-linked incentives to states for effective destination management, including tourist amenities, cleanliness, and marketing efforts, and introducing streamlined e-visa facilities along with visa fee waivers for certain tourist groups. Continuing with the emphasis on places of spiritual and religious significance, in the July budget, there will be a special focus on destinations related to the life and times of Lord Buddha. Medical tourism and heal in India. Medical tourism and heal in India will be promoted in partnership with the private sector along with capacity building and easier visa norms. Investing in innovation. To implement private sector-driven research, development and innovation initiatives announced in the July budget, I am now allocating 20,000 crore rupees for this purpose. A deep tech fund of funds will also be explored to catalyze the next generation startups as a part of this initiative. In the next 5 years, under the PM Research Fellowship Scheme, we will provide 10,000 fellowships for technological research in IITs and IISc with enhanced financial support. The second gene bank with 10 lakh germplasm lines will be set up for future food and nutritional security. This will provide conservation support to both public and private sectors for genetic resources. We will start a national geospatial mission to develop foundational geospatial infrastructure and data. Using PM Gati Shakti, this mission will facilitate modernization of land records, urban planning, and design of infrastructure projects. A Gyan Bharatam mission for survey, documentation, and conservation of our manuscript heritage with academic institutions, museums, libraries, and private collectors will be undertaken to cover more than 1 crore manuscripts. We will set up a national digital repository of Indian knowledge systems for knowledge sharing. Now I move to exports as the fourth engine. We will set up an export promotion mission with sectoral and ministerial targets, driven jointly by the Ministries of Commerce, MSME, and Finance. It will facilitate easy access to export credit, cross-border factoring support, support to MSMEs to tackle non-tariff measures in overseas markets. A digital public infrastructure, Bharat Trade Net, for international trade will be set up as a unified platform for trade documentation and financing solutions. This will complement the Unified Logistics Interface platform. The BTN will be aligned with international practices. Support will be provided to develop domestic manufacturing capacities for our economy's integration with global supply chains. Sectors will be identified based on objective criteria. Facilitation groups with participation of senior officers and industry representatives will be formed for select products and supply chains. Through this, there are huge opportunities related to Industry 4.0, which needs high skills and talent. Our youth have both. Our government will support the domestic electronic equipment industry to leverage this opportunity for the benefit of our youth. A national framework will be formulated as guidance to states for promoting global capability centers in emerging Tier 2 cities. This will suggest measures for enhancing availability of talent and infrastructure, building bylaw reforms, and mechanisms for collaboration with industry. Our government will facilitate upgradation of infrastructure and warehousing for air cargo, including high-value perishable horticultural produce. Cargo screening and customs protocol will be streamlined and made user-friendly. Reforms as the fuel. Over the past 10 years, our government has implemented several reforms for convenience of taxpayers, such as faceless assessment, 2, taxpayer charter, 3, faster returns, 4, almost 99% returns being on self-assessment, and 5, Vivad Se Vishwas scheme. Continuing these efforts, I reaffirm the commitment of the tax department to trust first, scrutinize later. I also propose to introduce the new income tax bill next week. I will detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped central KYC registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Requirements and procedures for speedy approval of company mergers will be rationalized. The scope for fast-track mergers will also be widened and the process made simpler. As proposed in the interim budget, We signed bilateral investment treaties with 2 countries in 2024 to encourage sustained foreign investment, and in the spirit of First Develop India, the current model BIT will be revamped and made more investor-friendly. In the last 10 years, in several aspects, including financial and non-financial, our government has demonstrated a steadfast commitment to ease of doing business. We are determined to ensure that our regulations must keep up with technological innovations and global policy developments. A light touch regulatory framework based on principles and trust will unleash productivity and employment. Through this framework, we will update regulations that were made under old laws. To develop this modern, flexible, people-friendly, and trust-based regulatory framework appropriate for the 21st century, I propose 4 specific measures. A high-level committee for regulatory reforms will be set up for a review of all non-financial sector regulations, certifications, licenses, and permissions. The committee will be expected to make recommendations within a year. The objective is to strengthen trust-based economic governance and take transformational measures to enhance ease of doing business, especially in matters of inspection and compliances. States will be encouraged to join in this endeavor. An investment friendliness index of states will be launched in 2025 to further the spirit of competitive, cooperative federalism. Under the Financial Stability and Development Council, a mechanism will be set up to evaluate impact of the current financial regulations and subsidiary instructions. It will also formulate a framework to enhance their responsiveness and development of the financial sector. In the Jan Vishwas Act 2023, more than 180 legal provisions were decriminalized. Our government will now bring up the Jan Vishwas Bill 2.0 to decriminalize more than 100 provisions in various laws. I now move to fiscal policy. In the July budget, I had committed to staying the course for fiscal consolidation. Our endeavor will be to keep the fiscal deficit each year such that central government debt remains on a declining path as a percentage of the GDP. The roadmap for the next 6 years has been detailed in the FRBM statement. Revised estimates for 2024-25. The revised estimate of the total receipts other than borrowings is 31.47 lakh crore rupees, of which the net tax receipts are 25.57 lakh crore rupees. The revised estimate of the total expenditure is 47.16 lakh crore rupees, of which the capital expenditure is about 10.18 lakh crore rupees. The revised estimate of the fiscal deficit is 4.8% of the GDP. Budget estimates for 25-26. Coming to 25-26, the total receipts other than borrowings and total expenditure are estimated at 34.96 lakh crore rupees and 50.65 lakh crore rupees respectively. The net tax receipts are estimated at 28.37 lakh crore rupees. The fiscal deficit is estimated to be 4.4% of GDP. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.54 lakh crore. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 14.82 lakh crore rupees. I will now move to Part B. Indirect taxes. My proposals relating to customs aim to rationalize tariff structure and address duty inversion. These will also support domestic manufacturing and value addition, promote exports, facilitate trade, and provide relief to common people. Rationalization of customs tariff structure for industrial goods. As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate. 2. Apply appropriate cess to broadly maintain effective duty incidence, except on a few items where such incidence will reduce marginally. 3. Levy not more than 1 cess or surcharge. Therefore, I propose to exempt social welfare surcharge on 82 tariff lines that are subject to a cess. I shall now take up sector-specific proposals. To provide relief to patients, particularly those suffering from cancer, rare diseases, and other severe chronic diseases, I propose to add 36 life-saving drugs and medicines to the list of medicines fully exempted from basic custom duty. I also propose to add 6 life-saving medicines to the list attracting concessional custom duty of 5%. Full exemption and concessional duty will also respectively apply on the bulk drugs for manufacture of the above. Specified drugs and medicines under patient assistance programs run by the pharmaceutical companies are fully exempt from BCD, provided the medicines are supplied free of cost to the patients. I propose to add 37 more medicines along with 13 new patient assistance programs. Support to domestic manufacturing and value addition. Critical minerals. In the July 2024 budget, I had fully exempted BCD on 25 critical minerals that are not domestically available. I had also reduced BCD of 2 other such minerals to provide a major fillip to their processing, especially by MSMEs. Now, I propose to fully exempt cobalt powder and waste, the scrap of lithium-ion battery, lead, zinc, and 12 more critical minerals. This will help secure the availability for manufacturing in India and promote more jobs for our youth. To promote domestic production of technical textile products such as agro-textiles, medical textiles, and geotextiles at competitive prices, I propose to add 2 more types of shuttle-less looms to the list of fully exempted textile machinery. I also propose to revise the BCD rate on knitted fabrics covered by 9 tariff lines from 10 or 20 to 20% or 115 rupees per kg, whichever is higher. Electronic goods. In line with our Make in India policy and to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20% and reduce the BCD to 5% on open cell and other components. In 23-24 budget, for the manufacture of open cells of LCD, LED TVs, I had reduced the BCD on parts of open cells from 5% to 2.5%. To further boost the manufacture of such open cells, the BCD on these parts will now stand exempted. Lithium-ion battery. To the list of exempted capital goods, I propose to add 35 additional capital goods for EV battery manufacturing and 28 additional capital goods for mobile phone battery manufacturing. This will boost domestic manufacture of lithium-ion batteries, both for mobile phones and for electric vehicles. Considering that shipbuilding has a long gestation period, I propose to continue the exemption of BCD on raw materials, components, consumables, or parts for the manufacture of ships for another 10 years. I also propose the same dispensation for shipbreaking to make it more competitive. Telecommunication. To prevent classification disputes, I propose to reduce the BCD from 20% to 10% on carrier-grade Ethernet switches to make it at par with non-carrier-grade Ethernet switches. Export promotion. To facilitate exports of handicrafts, I propose to extend the time period for export from 6 months to 1 year, further extendable by another 3 months if required. I also propose to add 9 items to the list of duty-free inputs. Leather sector. I propose to fully exempt BCD on wet blue leather to facilitate imports for domestic value addition and employment. I also propose to exempt crust leather from 20% export duty to facilitate exports by small tanners. Marine products. To enhance India's competitiveness in the global seafood market, I propose to reduce BCD from 30% to 5% on frozen fish paste, surimi, for manufacture and export of its analog products. I also propose to reduce BCD from 15% to 5% on fish hydrolysates for manufacture of fish and shrimp feed. In July 2024 budget, to promote development of domestic MROs for aircraft and ships, I had extended the time limit for export of foreign origin goods that were imported for repairs from 6 months to 1 year and further extendable by 1 year. I now propose to extend the same dispensation for railway goods. Time limit for provisional assessment. Presently, the Customs Act 1962 does not provide any time limit to finalize provisional assessments, leading to uncertainty and cost to trade. As a measure of promoting ease of doing business, I propose to fix a time limit of 2 years, extendable by a year, for finalizing the provisional assessment. I propose to introduce a new provision that will enable importers or exporters, after clearance of goods, to voluntarily declare material facts and pay duty with interest but without penalty. This will incentivize voluntary compliance. However, this will not apply in cases where department has already initiated audit or investigation proceedings. For industry to better plan their imports, I propose to extend the time limit for the end use of imported inputs in the relevant rules from 6 months to 1 year. This will provide operational flexibility in view of cost and uncertainty of supply. Further, such importers will now have to file only quarterly statements instead of a monthly statement. I now come to my direct tax proposals. In Part A, I have briefly underlined taxation reforms as one of key reforms to realize our vision of Vikasit Bharat. In respect of criminal law, our government had earlier ushered in Bharatiya Nyaya Sanhita, replacing Bharatiya Danda Sanhita. I am happy to inform this august House and the country that for new income tax bill will carry forward the same spirit of Nyaya in its drafting as well. The new bill will be clear and direct in text, with close to half of the present law in terms of both chapters and words. It will be simple to understand for taxpayers and tax administrators, leading to tax certainty and reduced litigation. Reforms, however, are not a destination. They are means to achieve good governance for our people and economy. Providing good governance primarily involves being responsible. The Tirukural captures this in verse 542, which reads, "Vaanokki vaazhum ulagallam, mannavan kol nokki vaazhum kudi," meaning, just as the living beings live expecting rains, citizens live expecting good governance. Our government is committed to keeping an ear to the ground and a finger on the pulse and responding while balancing our national building efforts. The following measures will detail just how our government will, under the guidance of PM Modi, has taken steps to understand and address. I repeat that sentence, sir. The following measures will detail just how our government, under the guidance of PM Modi, has taken steps to understand and address the needs voiced by our citizens. My tax proposals are guided by this spirit. The objectives of my proposals are as follows. Personal income tax reforms with special focus on middle class. Rationalization of TDS and TCS for easing difficulties. Encouraging voluntary compliance. Reducing compliance burden. Ease of doing business, employment and investment. I will come to my proposal on personal income tax towards the end. TDS and TCS, rationalization for easing difficulties. I propose to rationalize tax deduction at source, TDS, by reducing the number of rates and thresholds above which TDS is deducted. Further, threshold amounts for tax deduction will be increased for better clarity and uniformity. The limit for tax deduction on interest for senior citizens is being doubled from the present 50,000 rupees to 1 lakh rupees. Similarly, the annual limit of 2.40 lakh rupees for TDS on rent is being increased to 6 lakh rupees. This will reduce the number of transactions liable to TDS, thus benefiting small taxpayers receiving small payments. The threshold to collect tax at source, the TCS, on remittances under RBI's liberalized remittance scheme, the LRS, is proposed to be increased from 7 lakh to 10 lakhs. I also propose to remove TCS on remittances for education purposes, where such remittances is out of a loan taken from a specified financial institution. Both TDS and TCS are being applied on any transaction related to sale of goods. To prevent such compliance difficulties, I propose to omit the TCS. I also propose that the provisions of the higher TDS deduction will now apply only in non-PAN cases. In July 2024, the delay for payment of TDS up to the due date of filing statement was decriminalized. I propose to provide the same relaxation to TCS provisions as well. The government under the leadership of Prime Minister Modi believes in Sabka Saath, Sabka Vikas, Sabka Vishwas and Sabka Prayas. In line with this, we brought in updated return facility in 2022 for voluntary compliance by taxpayers who had omitted to report their correct income. Our trust in taxpayers was